We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone. Hope you guys are having a great time. We are live on all the various platforms that we now go live on, and I'm here with panelists Andrew, Dan, and Bacon.
No, I'm not an analyst. I'm just a guy.
Panelist.
Oh, panelist.
Panelist.
Okay.
Open your ears.
It stands for a poor analyst, so I live up to that term.
Cheers to a great day.
Cheers. I have an empty glass.
Beautiful green day. Paul getting wrecked. It's beautiful.
For anyone wondering, we'll get to that topic about covering shorts. That has nothing to do with us. That has something to do with someone who you should know about.
I actually make money shorting companies. You might try that for a change.
Well, yeah, maybe because you short companies and not a freaking
index. Yeah, companies, not indices.
Oh my. Yeah, we'll get to that topic. I mean, first topic of today, we have, of course, the rally. I think everyone in chat, probably everyone on this panel, I mean, we talked about it in the club. I think the club was pretty active today with regards to, I guess, the various movements. Some people up more than others. Did you guys see my tweets recently? I love tweeting kind of jokes, but
yeah, I saw that you went back and forth with the person.
No, I didn't go back and forth.
I piled on the end phase dude after I saw you did it.
Yeah.
I did the same one or a different one, but
I'll just go ahead and show. I had good fun on Twitter. I always
just imagine a company losing 70% of its value, and then it goes up one day, and you're like, "Woo, sky's the limit."
So here I'll actually share my screen.
Somebody said Paycom. Oh no!
The what Paycom?
Someone said Paycom comment, but it wasn't. No, not Paycom, but
let me show this. Yeah, so this was my. I was just having fun. So someone tweeted this, and then I just tweeted that, which I generally do. I admire the conviction.
I did. Yeah, mine's like, let's go.
It's bad because one of the companies that person follows is like a speculative holding of mine.
And this was also tweeted yesterday prior to the rally. Yeah. I feel like this is also pertinent to what we're discussing here today. Future me telling past me through the time travel portal. There's no way this goes tits up.
I appreciate that he's like living his best life. He secured the bag, and he's like, I'm just gonna do it. While like Elon sleeping on the floor at Twitter HQ, like Bezos are killing it.
No, for sure. So yeah, if you guys aren't following me on Twitter, go ahead and follow me on Twitter if you so wish. You get some joking tweets sometimes. You know, I like to have some humor. I'm bullish on single family homes over the next 1,000 years. Just
don't expect Fabio to follow you back. Yuck, 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 yuck.
I mean, I'm purposely trying to be, but yes.
I'm joking around. Just teasing you.
But yeah, for the most part, today's been quite eventful. If you look across the various indices, I think the biggest rallies I saw in my portfolio today were REITs. I don't know about you guys, but REITs. I know that Andrew's largest rallier today was
my
inconspicuous company that no one knows about.
REIT adjacent, in a way.
Oh, they were the biggest rally? I think by maybe dollar volume, but I'm saying just in isolation, wasn't it that nano cap?
Oh, yes,
it was. Be careful about mentioning. Genuinely, because it's really small, but
I forget about the one sometimes. I was thinking about the one that had the largest impact in my portfolio.
But yeah, we can talk about the one that had the largest impact. Let's talk about that one. Go ahead.
Okay, we'll talk about IWG. It rallied today because clearly I'm just a great stock picker, and it had nothing to do with beta or anything like that. It just rallied because the market saw how great of an undervaluation it was. Actually, European stocks in general rallied a ton today. Sorry,
Europeans. Yeah, we've been seeing some Adyen. Adyen's rallied nicely.
Yeah, there was a guy in our community that was like did a big write up on it, and it was like the market was like, okay, he did this write up. Time to just freaking rock it up 70%.
Yeah. For full disclosure, I have the small position Adyen, the club members. That's already been disclosed and updated too, but I haven't done a portfolio update on YouTube in a bit. Eventually I will.
Hey, shout out on culture currency.
Twitter is the future pro, success rocket.
Hey, Tractor Supply up almost 5.5. All right, let's go.
I'll pull up a chart and we can start looking at some of these, but
Today's just a fun day. I mean, it's like one of those days where you look at your like I think, you know, I got up this morning, I opened up my app and it just says like everything's up. Okay, cool. Don't need to look at the markets today. It's just one of those days where everything's rallying.
No, this is where you're wrong. If you let the YouTube algo do its thing, it'll recommend Meet Kevin live stream with the CPI.
is he actually live streaming right now?
He actually, he live streamed that like earlier in this morning, like when the CPI roll. We talked about it.
It's up 5%.
Yeah, good for him. But
I don't know if I had any. Oh, I had one stock.
I'm just pulling up a bunch of shares or stocks up here, going down like a memory list. But yeah, across the board, pretty much we saw a nice rally in many stocks. But if you look at some of these REITs here, so for example, Kilroy up 12.7%, BXP.
Can you do something with Kilroy?
Up 10. What?
Can you do something with Kilroy? Can you go back to Kilroy?
Yeah, of course.
Can you compare it to Paycom?
dear God, why do you do this to yourself?
Not doing it to myself.
Kilroy Jenkins.
Anyways. Okay, continue.
At least they have chicken.
Julius, send me the link to it and I'll take a look at it. I'm going through the questions. By the way, you guys can ask questions as you guys come in. Answer the poll you see.
PLA killing it again. Sorry.
I think Warren releases 13F today too. Sorry, go ahead.
No, I'm just going through this. What happened? I don't know what your question is regarding this. Nothing happened to it. If you saw the update, that's speculation. Big pharma.
Wait, who asked that about your portfolio?
That was him. Relax,
dude. You can copy Fabio at another day. All right, it's gonna be okay. I'm not saying you are, but I mean,
yeah. Maybe. There's always people that are out there copying.
Yeah.
So using that person as an opportunity to.
If you copied me, you'd fall asleep probably. As you
no. Are you asking what happened to the Capital Mindset Gold spreadsheet?
Yeah.
Isn't it still out there?
Gold member, and then you have access to it.
Well, not only that, I mean, then there's the holding co too. But I don't know if they might not be a club member, but I update on YouTube less frequently, and the members also get basically the brokerage sheet. So
I guess just ping Fabio in the Discord.
But I mean, if you're gonna be using it to copy, I don't recommend that. So, anyways, okay, so we are getting questions about Warner Bros. Discovery, Paramount, and Disney. We can answer those as well. ASO, but let's kind of go through piece by piece. I did get added because we do want to. Let me go ahead and save this because JC would like us to talk about the new Pabrai fund.
Oh, that man has an impressive mustache.
Here, I'm going to present the entire window. Let's call it this. Boom. All right.
Never given a mustache a shot. Maybe I should someday. Just.
So this is apparently the new fund, circling the wagons, so to speak. I guess, yeah, because he's using the metaphor. For those of you who haven't heard the term circling the wagons, it's to protect, for example, your valuables. So it's in theory what he's trying to echo is just keeping the highest quality assets and not fiddling with them or messing with them. But Pabrai Wagons Fund launched September 29, 2023. Net asset value of $10 per share. Long only public equities, globally opportunistic. And let me see. So, well, you already know Monish Pabrai. No need to introduce there. Any quick thoughts before we look into the common stock investments?
I can give you.
So is the idea that it's like protected? Is he using that language at all? Safeguarding, protecting.
Let me see. Oh,
Is it hedged? Or what's the? I mean, he's not protecting you from an expense ratio. That's just freaking.
He's gonna make his money. He's gonna make his money.
Yeah. Mustache maintenance doesn't come cheap, ladies and gentlemen.
Okay, so this is what I was looking for, the top holdings. We can kind of go through this. So we have Alpha Metallurgical Resources at 10.2, Consol Energy, TAV Airport Holdings.
Oh, so KKR, it's a buy.
KKR?
KKR and Co.
Yeah, yes, KKR, yeah. Fuhat really likes the Brookfield Corp.
Yep, Brookfield's in there. eBay, that's a strange one. Amazon bias, but launching it now, he's missed out a lot. Microsoft.
It's a quality. Okay, I got it. It's a quality fund. Okay.
Yeah, I was gonna say like
that. This is nothing new. I mean, I could give you 5 funds that do quality investments. So.
You're telling me a quality fund has 20% of my assets in Turkey?
Yeah, you see,
ones in this.
Yeah, that's what I'm wondering though. Is that like the premise of circling the wagons? Doesn't that imply a moat, but portable? Is this moat with extra fees and more content?
You got Strongman had a great day today.
We're going to be talking about some of those, but yeah, right here, net expense ratio 1.49%, retail class, institutional class 1.24%.
Yeah,
you get Pabrai, guys.
Nah.
Oh dang, Strongman, you got. I can't get. I haven't found that the software version of it.
Ooh.
So restrictions, 1% redemption fee, and okay, nothing's crazy. It's just quite expensive, and potentially, I mean, I don't really know if his it's unknown whether or not he's going to outperform, but who knows? Why not?
Could I give you a quality ETF people could look at other than this?
Yes, please.
EQUA. And you could also pair it. They have an international version of it to some or JQ. I'm sorry, JQUA. Oh, my bad.
Sorry, here we go. The JP Morgan US Quality Factor ETF.
They do a similar version of this for international also. I'm going to do an ETF review of this at some point. It's not bad. It's not bad.
Okay, let's take a look at some of the holdings in here, because I'm actually curious.
For you Paul followers, quality investing is not the same concept as value. They're actually they're quite a bit different. I'm going to do a video on this.
Oh, Meta's in there. Eli Lilly, Microsoft, Nvidia, Apple, Google.
Where people like Joseph Carlson screw up. Quality investing is, like, to be short, it's about buying exceptional companies at fair price, not exceptional companies at exaggerated or higher prices.
Oh, you mean to tell me that this ETF has percentage of net assets for each position being no greater than 2.5%? What?
We're gonna say goodbye to Andrew for now. He's got to go do some CFO work. So.
Oh, okay. Bye, Andrew. Bye, Andrew.
I'll be back later, maybe.
Bye, Andrew.
The trap of someone like Paul from Everything Money is he mixes his terminology between value investing and quality investing, because he's like, I want exceptional businesses at dirt cheap prices. But you're mixing 2 different types of investing.
Mm-hmm.
He doesn't even know what value investing is at its heart.
Yeah.
And then when he does pick value investing plays, they're always turnaround plays, almost always.
We're talking about
Paul. He doesn't even realize it. So
yeah,
it's not even like they're cheap because they're cheap. It's like they're cheap because they're garbage companies that need to change direction.
Is this the Paul conversation?
We can go into Paul if you.
Wait, who was that? Who was that?
No, that's Paul. No, I'm saying like Paul meshes quality investments with value investing.
Yeah,
talks. It's 2 different concepts.
Yes,
and he doesn't know the difference.
Yeah,
like, of course you want amazing quality business at rock bottom prices, right? But good luck finding that. What is Meta? The last 5 years? That's probably the only one I can think of. I wouldn't say Netflix because they had to make changes to their business. So I wouldn't.
There were some moments. I would say probably once a year there's some out there, but you got to find them in a given sector. So but let's say lesser quality. You had, when I was buying CAH, you technically also had an opportunity in McKesson and AmerisourceBergen, which were both higher quality. You had the oil drop off in 2020, and you could have bought any of those top names right before the election. You could have also picked up a lot of insurance companies in casualty insurance. I picked up Unum, if you guys recall from my, way back when, my portfolio updates. So Unum was the one I had, but there were other higher quality ones that you would have also done really well. You could have also gone a little bit more, not degen, but lower quality like MetLife as well. It still would have done well. The whole sector was just thrown out.
When I bought Cigna, I recognized that's a value investment. That is, it's a good business, not a great business, and it was at a rock bottom price at $250. But you not every company can just be easily identified. It's like it depends on the price. You can have companies at different points of the year, and you could call them a value or a quality or some other term you want to throw at it. All these retail created terms.
Strongman asked me to pull up VT, so here it is. VT up 2.3.
Did VT beat SPY today? I think it did.
Well, probably because of international performance. Well, international did well today.
Yep.
So
that is interesting.
Yeah, it did.
Or is it because small caps went up higher? I think small caps are 4% this year today, right?
Small caps did really well. My small caps have done really well today. I think I told you guys about the volatility in one of my small cap names. You know which one, right?
Does it rhyme with Crocs?
No. That's
I'm joking.
Oh yeah, Crocs 9%. Did you see that?
I posted it in the private chat. That's the ticker. I told you guys.
Okay. I was busy today. I didn't see a lot of chat.
Yeah.
Yeah, and that DPSI did pretty well as well today. Shouldn't Don from be on this panel? Who the fuck is that? International stocks, bro. Yeah, so international stocks actually carried the day, it seems, for the time being, and VT, and that actually helped out against VU. And Chris, hey, that could be the moment, the rally. U.S. shills destroyed.
I just think that it's hilarious though when people like go after Chris and VT, like, because I have like minor disagreements, but nothing serious. When people say, "Oh, this means that he's going to be completely destroyed," like, no, he's still like VT still has a huge amount of big U.S. market cap names. Like,
I wasn't a fan of VT either.
Yeah,
I mean,
but like
actually, when I talked to him about, I get it. Like,
yeah,
I get it, right?
Yeah,
like, and I'm kind of almost going towards that direction. I don't own VT, but I get it, and I'm going towards that direction. Just generally as I get towards retirement.
No, absolutely. Did you? Well, let's talk about the CPI and kind of rehash some of these points here to kind of further guide the conversation. But macro, yes, macro, which we'll caveat towards the end with a warning on using macro. But so we had a discussion already about this, and when we take, of course, all items, we see what we currently see. But we were discussing shelter, right?
Yes.
And if we recall, so just a reminder to all the new people and older people who are rejoining us, newer people who are new to the channel. There was a live stream a while ago where we had a discussion about this as well, about the components of the CPI measure. And one of the largest components is, of course, shelter. And that was one of the things we were discussing today. And as we saw, or more recently, some softening in the increase in the shelter inflation, this could, if it continues to trend in the downward direction, have a, let's call it, cooling effect on overall inflation readings. because we're seeing it in some spots, but I believe, and this is the case before we were discussing, was inflation was held up a lot because of shelter. So there are certain stocks that will probably do well in this environment as we kind of proceed forward. And one of those companies actually has been warning that their customer base has a limited amount of appetite for price increases going forward. Should we talk about that one briefly?
You mean the stock I'll never buy?
The stock you'll never buy.
Go for it.
Dollar General.
I've never stepped in those damn stores, so. I mean, Tractor Supply is not similar-ish, I guess. So,
yeah. So Tractor Supply, yeah, kind of. But some of these retail companies that have been telling their shareholders through their, conference calls, hey, our price increases. There is a finite amount that we can do before our customer starts to reject prices. And a lot of people think that prices do just go up infinitely and there's not really a pushback from consumers. So we can see, for example, we call the term demand destruction in some markets. And when we start to see necessities increase, we will start to see softening in discretionary. And we also have to separate amongst the different demographics, right? We have demographics such as, let's call it high income earners, so upper middle class, upper class, and then we have lower class or middle lower class who are maybe more predisposed to be renters, the younger generation renters. And so the changes in home prices or the changes in living costs or shelter costs, the cost of shelter, that's going to have more of an impact on them, because if you have the upper middle class or middle class household that owns their home, has a mortgage, the fluctuation is going to be in their property tax, property insurance, etc. While the renter, well, hey, the year's up or the lease is up. Now you renew the lease with an increase in your rent. And that might put a strain on your expenditure power because, your income didn't go up nearly as much, maybe, as your necessity expenses did. And so for that consumer, you might see changes in behavior, and that might not be reflected across all the retail stocks you pay attention to. Maybe the ones that cater to middle class, upper middle class, they won't see the same weakness as something like a Dollar General that caters more to the average income of about $40,000 or some odd $1,000. And so you'll hear their commentary be a little bit different from the likes of Costco. What is the average income of Costco? Does anyone remember?
That I forgot.
What about Costco?
What's the average income of Costco?
Of their customer base?
Well, yeah.
We don't have Costco's here.
It's $120,000.
Oh, okay. That's more than what I was going to guess. I was going to guess between 80 and 100K a year.
Well, geez, you can't leave those stores without dropping $500. So
yeah,
it is $120,000. So this good guesses here, and this is actually the average income of a Sam's Club customer. So I have those off the top of my head, and then Dollar General's $40 some odd $1,000. So when you take that into consideration, you start to maybe rationalize what are the different observed behaviors that each company might see, and if that is correct, and again we're going back to that renter versus home buyer. Remember that the way they measure shelter cost increases is that it's a survey of how much you would rent for. So we are trying to actually measure the differences in, at the end of the day, what we're trying to capture is rent, because of course we understand that fixed home costs of like a mortgage, etc., won't be changed. He's older than you. Sam's Club is mid. What do you guys think of IWM outperforming the next few months? We'll talk about that in a bit. Use the medium, not the average. Come on, bro. I meant to say, when I say median, when I say average for these companies, I mean to say median. So correction. I thought that was implied, because for different data sets, you'll use median as better barometer versus average. And so we will say that the better way to measure an average for this data set is median. The better way for that data set is average. So for income, it's typically the median income. But yeah, good to say. Good to clarify.
If only people used mode And if you know your statistics,
Yeah.
R squared. There's another statistic. Shout out to you, Garbage Goober.
I don't have the exact answer to this off the top, JJ Gills, but I'm just going off of what they say. So they could be lying. I'm just going to trust them on this.
They could take credit card applications if they have them and extrapolate that to the whole population.
They have people internally that measure that, so keep track of that for market day. So I'm just trusting them. So granted, I'm not seeing, oh, how are you measuring this? So I don't have that exactly off the top of my head. They more than likely have maybe different ways. I don't know what the sampling size is, but I'm just going off of them. Okay, but in theory, if they're correct, if they're telling me the truth, if Costco is in fact getting the correct measure of 120 some odd thousand US dollars median income, in theory, we should see potentially less changes in customer behavior throughout this inflationary cycle than I would expect to see from Dollar General. I actually would expect Costco to have commentary more so on, oh, everything's fine for a longer period of time. And then I would expect Dollar General, if they are telling me the truth, that it's 40 some odd thousand, that there's less room to navigate prices or maneuver prices. So, and that's actually what's happening. So from there, I'm going to conclude that they're probably telling me the truth, or somewhere around there. Didn't Peter Lynch say if you spent $14 realty income is the best? Fabio tried Costco hot dog and fell in love. So I am doing something that every time I go to Costco and eat a hot dog, I am having fun with the club members, and I will just buy a share of Costco. And we'll see how that works out.
Now, for those that are like really like getting into SEC filings, wouldn't you say that it's not the cleanest comparison besides customer base between Dollar General and Costco, just because Costco has a membership fee that subscription revenue like changes the numbers drastically.
No, yeah. They would not be. They're not even comparable business models. Costco's business model is somewhat more comparable, without getting direct, to Sam's Club and BJ's. Going to be more comparable to like a Prime membership at Amazon, somewhat, because not really.
Yeah.
But you're getting in that realm. Fabio, the gulping, all that. You missed it, bro. Costco just opened up in Claremont. No, I already know. Yeah, it opened, I think, today. So hey, there it is. Yeah, there's new Costco's opening up in the Central Florida area. Florida as a whole state is growing nicely. So really, really happy to see that for the state. But what are your guys' thoughts on the overall rally? Do you guys think this rally is the beginning of a Santa rally? I know Bacon likes to.
It's a meme. It's a funny meme I embraced last year. I have no strong opinions one way or the other, so I'll defer to everyone else. I'll probably embrace the meme as a joke, but
embrace it. Embrace the rally.
The Fed have said the whole time 2%. Right?
Yeah.
We're not at 2%.
Yep.
So, I don't know. I don't think this really changes my thinking that much, besides what I've been doing so far.
Yeah, because I agree.
Like, I'm waiting. I have investment ideas for when we start cutting rates. We're not there yet. So unlike me, Kevin, who said he was waiting, I'm actually waiting.
Yeah, because like I think important thing, and that makes it very difficult, why macro has a reputation of like hiding a lot of BSers, is if you got enough hawkish people or enough hawkish sentiment from people that really matter, hawks are going to hawk. So like you can prognosticate and be a talking head all you want, but at the end of the day,
I mean, my understanding, a lot of money was on the sidelines this year when people were pulling out and going to cash or treasuries. And the slightest bit of good news, now we get this rally today. So I don't know. It's a weird place to be. It doesn't really change. I'm kind of still looking at the same things right now than I was this weekend.
Yeah, and naturally, of course, to counter myself, like, does the Fed necessarily make the rates or do they influence rates? And I'm not rehashing that old thing. That was last year Fabio content, back when we joked about phase 2.
Which phase 2 on the cards?
Phase 2.
Phase 2. Yeah. So whether or not we speculate as to what the Fed's going to do, et cetera, I don't think it matters whatsoever. It hasn't mattered for me. It hasn't mattered for my portfolio. It's I don't feel like there's really a point to worry about it. So
if you were a macro trader waiting for, like, you missed out on today, if you were someone sitting on the sidelines waiting for some macro event to strike that would work out, well, these are the days you miss, like today.
This is a great comment, but yes.
I could show a chart where it's like the people that are in cash are the worst performers. Even if you bought stocks at the worst timing every year over 20 years, you're still better off. Like if you literally just bought like the worst 10 days of the year where like it was the highest, you still made out better than someone in cash. So
yeah, no. And the portfolio, I mean, you would have a doom and gloom mentality over a very long period of time and just completely miss out on a ton of potential gains. Because even in a bad environment, there are actual investing opportunities. And I'm not talking about strictly stocks. Like we can talk about other asset classes, private asset classes, maybe in your own life. If you don't take the initiative and put capital to work in any environment, then you're just going to be stuck. And really, you should only blame yourself for that. But being overly cautious can be harmful to your overall investing returns. But at the same time, I'm going to caveat that with being overly aggressive to story driven can equally have an impact on your investment performance. And almost conversely to that, getting back to Paul a little bit, because we'll just get this topic out of the way. So the topic, covering your shorts. Who are we talking about? We're talking about Paul from Everything Money. And dear God, okay. So
I was so excited when I saw that clip. I was busy, but I saw it briefly, and I'm like, oh my God, what a great day. That he said that.
If you don't know, there is a channel called Everything Money, has around 200 some odd thousand subscribers. It's run by two individuals who each of them have pretty much their way they got their money is not from investing. It is from their family, and they were given money. Depending on the time of the year, one of the hosts will tell you a different number, a different dollar figure. It's either 125,000 or 150,000. The story is just different times of the year when he tells it. And supposedly turn that 150,000 or 125,000 into $1 million USD over the course of a couple years, and then promises to teach you to do the same thing for about $80 a month. If you fall for that, good luck to you. And then the other individual has no observable success in investing that I can see, because first of all, we don't even know allocation percentage. We don't know. We just have time stipulations to go off of. So what I mean by that is we can go off of like a video where he was very bullish on a stock and kind of get an idea of the performance. Today, we got a rare glimpse where he made a comment that he was covering his shorts, margin called on his shorts. He knowingly had a short position in Nvidia, QQQ. I believe at one point he was short the S&P. In general, this person also has an article that, you can't really erase these things. You can find methods to recover articles that even were deleted in the past. And one of them advocated for being short Amazon. I believe the year was 2014 or 2013. That was not a good idea. The analysis was very surface level. And this person, even despite all this, continues on to today and has the same aura of authority. They believe they do, or of authority, that they're able to, claim to have some sort of track record to go off of and have this investing prowess. And it just simply can't be the case. Can't be the case because I can't even observe a single victory for this person in either direction.
His shining stock investment, I think, this year was 3M. Honestly, the way he like talked about it, and he put a disclaimer in the video that he bought it. That was his crown jewel this year. Like, and then now that he's got margin called, so it's like he's missed out on all the gains of the market this year.
Dan, can you go over that for a second? Why is it silly? Why are call options not free money?
Who's vacuum? Is that air conditioner or something? Oh, well, I think I mentioned this before. You're basically selling the future of growth of a investment when you do call options. So we use an example. There was somebody got cut in half by Enphase. So like a certain person we were watching, he lost like 50% of his Enphase investment, and he said, "Well, to get back my money, I'm going to sell contracts to get premium." Like, well, if you expect it to rebound at some point, you are selling the potential gains you would experience when you do these premium contracts in the investment. Like nothing's free. And did you want me to something else or?
No. A bacon. I think there's an AC unit in the background. I was testing to see what it was. No, but that's pretty much it. Like it did also kind of highlighting. Sorry, because I was seeing the audio issue. Did you mention about
cash secured puts? Right, like you're agreeing to hold money to get a premium for it. So it's the different. So now you're losing opportunity costs that you can make decisions in the future because you can't act on these future events you don't know about. You've taken premium to take that ability away from you.
And I think the other point, besides also the argument about selling contracts in either case because you're giving up upside or downside, you're including other risks. We also have the commentary around the Buffett indicator and how this is overused. So the Buffett indicator was at one point in time perhaps a useful metric, but over time we can't just simply look to past metrics and say that they have the same usefulness or utility into the future. So the Buffett indicator is a simple comparison between the price to earnings, the PE ratio of the broader index relative or valuations, a comparative valuation of equities to the GDP of the United States. There are issues with that inherently, and as I said, United States, that should immediately light up some red flags for some of you that we are okay. What happened to the top holdings of the S&P 500? We've had discussions about this before, how we have a lot of global companies in the United States. In reality, if you wanted to kind of keep that more or less the same in the first place, you would have to do some sort of weighting to account for the GDP of the various other countries that they're involved in, and then apply it if you want to kind of keep an apples to apples comparison. And on top of that, Chris points out a good point here. The differences in corporate margins from today, from back then, are actually different. So, for example, the tax rates are also different. You can't tell me for a second that changes in the effective tax rates for corporations has no impact on valuation. You can't tell me that cost of capital has no impact on valuation. There's a lot of nuances that just using a metric and just saying the stock market should fall 70% in order for us to get to fair value, it has any credence whatsoever, which is actually what they said in that video when Cole, shout out to Cole, sent me the clip for me to watch and die a little bit on the inside, was exactly that the claim was the stock market has 70% to fall before we reach fair value. I don't know. Okay, cool.
just slap the PE of 12, 14, and 16. Come on, y'all. Don't act brand new.
Yeah, but or slap.
I want to do a covered call video at some point. Maybe I can have you come on, Fabio, and we can explain.
Yeah.
Why? Because that's the best example probably for retail. Like why contracts are not some magic or some new. Just because they're new to you doesn't mean it's new. And there's those premiums come at a cost to investors, and I don't think they appreciate it.
Yeah. No, a lot of retail investors got sucked into calls and put strategies, thinking it's some sort of free money that they can just infinitely generate. I do engage with it. I mean, we talk about
I
it
do
in the
use
club.
them.
Yeah, I use them too.
Yeah, it's a tool though. It's not like an investment strat. Like, like some people we've seen, like they're like 100% options or contracts, and you're like, that. What are you doing? It doesn't even compute with my brain how you came to that point where that's how you invest.
Yeah.
I just also like the people that find a dog crap company where it's like, oh, this is an obvious short, but like, maybe they have enough between the ears to say, oh, the short interest is so crowded that the terms for shorting it, like, traditionally won't work out. But then they think, oh, well, maybe if I buy some puts, it'll work out for me. And
like I've been pretty good at shorting companies recently, but
not so fast.
I'm not going to teach you how to do it. The only people that are going to teach you how to do it probably suck balls at it. I'll be honest with you, because I make good money doing it. I don't want to teach you how I do it. Like, so anybody willing to teach you how to short companies is because they're clowns at it. And the only way they generate income is because they can sell you a course how to be terrible at it with them. So someone like Paul, I'm sure, but you can pay him $30 or $80 a month.
Yeah. I'm seeing you don't use.
Oh yes, Caleb. It's the hedgies. If you're a retail investor, just blame the hedgies.
The biggest flaw with Paul and Everything Money is just like he thinks his formula can apply to everything. And I've seen comments in his videos. People get this. There's been some great comments. It's like he assumes that his valuation, his value investing methodology and software can cover every company from, Procter & Gamble's selling detergent to Nvidia in artificial intelligence. So his assumption is it's all the same. It's all numbers, and my DCF model will just outperform or covers everything. Like, there's no hubris there to understand there's certain investments that you can't make with your methodology. Like and Fabio's seen, like, there's certain times when they talk in the community about certain investments, I'm out. I don't understand them. I have no way to value certain investments people make, like the payroll companies or some of the software SaaS companies.
Mm-hmm.
I'm just out.
Yeah.
And I think for Everything Money to think that all of that is on the table because of their system or formula is foolish. And he's out. They've gotten wrecked every year, I think, and it shows.
So just to summarize, essentially, this is a person that said in the bad times they're going to do well, and everyone's going to wish that they were allocated like they were. Well, we had 2022.
Yeah.
They still did poorly.
Yeah.
So the bad time came, and they didn't. They weren't up to snuff of what they claimed they would get. And I'm going to say it, but I did pretty well in 2022. I'm going to not be bashful about that anymore. And then 2023 comes around, and then they completely missed a rally, and they didn't have the proper exposure to the good quality assets that were actually on sale in 2022. And then on top of that, they actually had some of their assets further deteriorate, which is quite interesting. And so the likelihood that their methodology would change in the future is unlikely. And we're talking about massive deltas in underperformance. Of course, we won't actually know. And remember, the whole lawyer argument of not disclosing holdings is complete BS. And again, that we don't even need a dollar figure. Just percent allocation is good enough right now. Just without even that, just going off of sentiment around various equities and around given time periods, that's enough to determine that the performance probably wasn't all too good. So, yeah. Any other additions to
that? I just don't like them. I have my own history and track record with them. Yeah.
I'm gonna at some point. I don't know if people generally understand. Like, he's been a bear for like a decade that I have proof of, maybe longer. And there's these perma bears. There's a reason there's a term perma bear. They just, for some reason, think at all times. And back in 2012, after the big boom, after the recession, they were all screaming overvalue, we're screwed. I mean, compared to where we are now, and they've never changed their tune.
Yeah.
And you know what? The U.S. economy could keep going, and I think for the rest of my life, the U.S. economy is going to keep going just fine. To think that you can say that the country's like going to fall off a cliff, or we've reached the pinnacle of America excellence. It's like we've only been a first world power since, you could argue, Theodore Roosevelt was the start of this era. So don't go back to the start of the country. Like he started us on this path to being the greatest country in the world. I'm gonna say it. So we're only 100 years into this. I mean, think how long we could be the preeminent economy in the world for 300 years. So like, why are you even getting into this? I have a history degree. Like, why are you getting into this? Like, don't worry about it.
Does it not occur to him ever that like sometimes premiums are at least understandable? Like, I'm not saying, you should blindly YOLO and throw all your money into a company that has premiums attached to them, but like that, at the same time, are you going to find me rushing to short Visa anytime soon? Like, how has Visa done since the past, I don't know, 5-10ish years? I think it would be safe to say odds are Visa has probably had a premium that entire time. Is my guess.
It has had a premium for most of
this. Shorting is purely based on valuation.
Yeah, like
I've seen videos talking about it, and I've never done that in my life.
Yeah,
I've never shorted a company on valuation.
Yeah, like if you want to look at Hindenburg,
like please, like, people go read the Hindenburg reports. Do they short on valuation? They do not. They short on some fundamental flaw of the business. So Paul is shorting things based on valuation, or macro trends, and he loses every time. I'm sure this isn't the first time he's been margin called on his puts, based on what we've seen, because he thinks all the tech is overvalued because he uses those historic metrics. They're like 100 years old. It's embarrassing that he sells courses. Like it's just crazy. Like, this man sells courses. My God. Or software. I don't know if he must have courses behind it, but
their methodology, it's, hey, we like this company, but based off of our quote unquote model.
And Strongman did an excellent video probably a year ago where he broke down their model, the flaws of their model.
Oh yeah.
He did a great job with it, because he broke down what is wrong with their model and how there's no adaptability to it. It is whatever the projected number is carries forward. You can't adjust the metrics. I don't know what the title of it was. It was a while ago, but he broke it down really well. So like the model they use is like elementary level. I built one. So I literally went on just to screw around. I went on YouTube and just Googled creating a DCF model. And I did it in like 2 hours from scratch, knowing nothing about like how to create one. And mine had adaptability. I could make adjustments to the numbers, which their model doesn't have.
The answer to Garbage Goober is yes. And I think you're asking pertaining to the Everything Money evaluation model, which is extraordinarily basic.
The other thing, so Fabio, you can probably so they will do an assessment. There's the 3 valuations, right? Low, medium, high. They will then revisit the same company like a month later, do a brand new evaluation, and it's totally different numbers.
Yep.
My point has always been, my numbers don't change that quickly. Like Disney at $78 was essentially the same valuation to me as today when it was $91.
Yeah.
It didn't change. I haven't rerun anything. Like, your modeling price targets don't change so flippantly like they do. Like, to me, I don't know what you think, but
back when I used to make more videos frequently, how often would I revisit a company?
Yeah. No, that's a very good point. Yeah.
Yeah.
Like, it would have to be on a live stream. Someone would have to hassle you.
Yeah, someone would have to hassle me to revisit a company, make a video about it. But Bacon, go answer your question, or sorry, say what you were going to say. And
yeah. So like Everything Money, like your stereotypical thing is either, hey, we love it, and odds are it's a value trap, or oh, we like the company, we'd love to buy in, but guys, price is not the same thing as value, which no duh. And in all honesty, it's more of a, hey guys, we like it, cut the price by 50%, and then drops by 50%. Yeah, model still says drop it by another 50%. Like, okay.
Can we talk about Target? Caleb's comment.
Yes, let's talk about Target. But quickly on this a question, because it's a continuation of that. But they have 3M. They might not have some of these stocks. When they rally, they don't even capture the full rally because they sell a lot of the gains via their contracts. So we had don't forget, Sleep Numbers, another stock there. He did exit that one, but after he didn't understand accounting and he didn't understand how to read a balance sheet, so he didn't understand the risks. I have a video on that. I think Hello World, I'm pretty sure you were a Capital Mindset subscriber back then. I don't remember, but I do have a video on that, breaking that down. And all Paul had to do actually was watch my video, and he would have been like, "Oh, that's what's wrong." But he probably has like an ego so far up his, you know what. So point being, or getting back to the question off memory, Walgreens was another one.
Walgreens Boots, yep. I don't know if he still has some other names like Steelcase, but he got in at ugly prices. Same with Intel.
Yes. We have some stocks that we do overlap in, but the price entries are completely different.
Yep. CCL, Carnival Cruise, was at least one for a good while there. I don't know if they're still in it.
That's a great example of how their model fails, is Walgreens. Because that check marks all the boxes, their 8 pillars. Walgreens checks all the boxes that would appeal to their model. But if you don't look past that and you see it's a deteriorating business in general, you get destroyed. So this is what you get when you do the everything money investing. You end up with this.
I'm gonna go over what I went over in the club all those months ago about Walgreens. I forget. I mean, I've gone over this a couple times, so this is gonna be like repeat to you guys. But I'm gonna use. Let me remove this. I'm gonna use this as a good frame of reference, and so I'm gonna basically be repeating some information. I did a breakdown of Walgreens as to like why, and now we even have more data because now we have more time that has passed, and actually the price has continued to deteriorate. So let me go ahead and showcase some of the metrics that we can take a look at. So we need they shove it into the profitability, return on equity, return on cap. No. We need. Where do they put this thing? I'm gonna have to use the search. Where do they put operating margins?
Shoot. I'm drawing a blank.
Yeah, I need to use this a little bit. Profitability, net income. Oh no, here it is. So it's gonna be in here. Net income margin. We'll throw this in there, but
they probably use trailing for all their stuff.
EBIT margins. It'll throw an EBITDA margin, and I want the price. Return, not the price return. We'll actually go and show market cap.
I wish they defaulted to total return.
Yeah.
We'll use market cap for now. Okay, so let me pull up on the longer term. It might take a little bit for it to load in. Okay, so if you notice exactly what's going on, you can see that the margin pressure on the operating margin, we saw deterioration going back as far as 2015, 2017, and the story has been the same. And it's until they figure out how to reverse these trends and stop the bleed, the equity price is probably not going to do all too much better. And that's a lot of pressure coming in from competitors, the industry itself. For example, we have Amazon coming in with their online pharmacy. You do also have the pharmacy divisions within larger retailers, of course, that have also put on some pressure. So you've had revenue increase, and let me actually put the, they should have revenue somewhere. Income statement. Okay, it's going to be in here. And let me clean this up a little bit. So actually, I'm going to bring this back. EBITDA margin. So we did actually have increasing revenues. Don't kid yourself there. So sales did increase, but the
growth company, bro.
Yeah, it's a growth company. But overall, the underneath the hood, if you weren't paying attention to this, and you were just paying attention to, well, sales grew. I think EPS had moments of growth. We'll actually pull that up. So EPS, yeah. So it had fluctuations here.
Who knows? They could have opened more stores that started overlapping each other for revenue growth. Or they started offering more coupons just to drive more traffic, but like that's not great. Like
yeah. Oh wow! I did not even know he was in Nautilus. Nautilus, I have a video as well. Go check it out about it being a value trap.
Oh,
and I think it's going to declare bankruptcy, by the way. So they had a lot of issues with inventory. Could have spotted it. Just saying. Oh, wait, are they dead? I think they might have died. I think they died.
Are they dead? Oh my god, really?
I think they died.
I never even noticed.
Okay.
Nope.
Yep, they're gone.
Yep. Hey, score 1 for the not good guys.
Oh, they got a delist warning. Yep. Okay. Wow.
Yep.
Oh man. Bye-bye.
Yep. Bowflex Inc.
Okay, no, they're just BFX. Okay, they're BFX. We found them. They're not gone, but dear God, they have. Yeah. So you guys can go refer to my really old video now on Nautilus, and you can get the gist about what occurred. So I did not know they were in Nautilus. That's pretty horrendous. So wow. They were also in another value trap, which was Smith and Wesson.
Yep.
I have no idea how they did that one either.
Oh yeah.
It's like some of these are really basic. I swear he's a new investor. So I swear he's exhibiting.
He's just an arrogant, like cocky ass. Because like it just
like firearm companies will always sell at rock bottom P's for many reasons.
Yeah, you just like he's too arrogant to learn from his own screw ups, honestly.
Okay, so apparently I'm being told he also bought Ebix. I didn't even know this one. I'm gonna assume it's been destroyed. So this is why I say certain people just don't miss, and when they get bullish on a stock, get terrified. Get worried.
Yeah,
he will never talk about these stocks again. And then he's waiting for him to have like a single winner, and then he will talk about that one. But the problem is it's almost sad at this point because he doesn't seem to have a single one. And so some of the other people that we might throw criticism at, they'll have a winner, eventually.
Law of averages.
I don't know how you got so many dudes in one stream. Bump. Thank you, Andrew.
I'm never bearish. I've been in the book. I've been in since like 1999. You're gonna be all right, people.
Yeah. Some people really like, and I don't mean this as an insult, but some people really should index, and by index I don't mean short the index, like one of the grown-up big boy index.
No, and I've just like I didn't even literally know what ETFs and mutual funds were when I started. I thought you bought individual stocks, and then if you had a 401k, you could buy index stuff. I didn't know. But now it's like there's some great options for people, and then you can you can make your shots when you get some competencies and figure out some stuff.
Yeah, I don't follow my own advice to people, where when I say vast majority in an index fund and then very few amount into individual.
So we don't have to preach what we do. Like I preach something I don't fucking do per se. I'm kind of going towards a corp satellites, but I don't do it. But like you're college educated in this line of work. You have job experiences, so you've done the groundwork to pick individual stocks. So like it's deserved that you can pick a portfolio, Fabio. Like most of us out here work a job unrelated to investing of any sort. And we should devote a lot of our time to our career, make a few choice investments here and there, and live a happy life, hopefully. So. I think you can do something different than the advice you give. I think that's totally fine.
Oh yeah. Oh shoot. Warren Buffett is like a case in point example. Like he's recommended in the past, like, hey, index, but like, is he really indexed? Not necessarily.
Like, I don't know, most retail people, like they don't have the passion and the time investment involved that you do. Like, you spend I would never spend the time you do on this. So like, I think it's totally acceptable to tell people that you should index, but I have a portfolio of individual stocks, depending on the situation.
I agree with Andrew here. So if you're watching and you like content, feel free to leave a like, whatever platform you're actually watching us on. So if you're watching us on Twitter, YouTube, Twitch, leave a like, and that lets us know that you guys like this content. We'll continue to do more of these types of streams. I have fun doing them. I'm sure the panelists as well. But yeah, no, the thing is, I think I said this in the chat today, that, and this is something we've been joking around, but I'm thinking about it more and more. I genuinely will probably be at that point. If Meta gets to 400, that's retirement.
Like when I killed it for, I did really well with the Great Recession, right? Just kind of like what you did during COVID.
Yeah.
So I made a fundamental change in my investing after that, which now you're talking about the same thing, which is kind of it. I'm enjoying this. It's like part of the journey, right? Like, do you carry on with some of the good gains you've had, or do you try and protect what you've earned? That's a choice everyone's got to make, I guess, unless you're Paul and you never hit home runs ever in investing. So.
I will say, Caleb, kudos. The new Yahoo actually is good.
Yeah, I will say, Caleb, Fiddly and Schwab, and On God with Vanguard. If you know, you know.
If you know, you do know. You do, in fact, know.
Yes.
Yeah, and I think let's kind of took a twist to this. Let's say, because I did put up in one of the topics that we talked about is any new stocks that we're buying today. We'll go ahead and have that conversation.
Can we get Target? Somebody mentioned Target.
Oh yeah.
Let's talk about Target.
So I'll share this.
Yeah, why is this the old Yahoo?
Like I looked at this at lunch break today. I didn't have a ton of time.
Let's pull this up.
Okay, so this caught my eye. This story. So this California sheriff tweeted. So basically, the crux of this is Target told him they were watching shoplifters in a Target in California. Target told them, the head of security, that you could not arrest them in the store because they didn't want that to be videotaped and posted on media or online somewhere. So they demanded that the cops arrest the people outside while it was raining, is what the sheriff was saying. So it was kind of stunning. So I briefly looked as fast as I could while I was on break. And so Target, like a lot of stories I'm seeing is like from websites where you get reviews of people working there. Target is like not allowing their workers to report thefts to the police, is what I'm seeing. So they're told not to call the police when there's a theft. They're supposed to scan a QR code to note that there was a theft, and then they just move on. And then they've opened these Targets with these glass paneled stores where the reviews are terrible. People are complaining it'll take 20 minutes to go get if say you want to go just get a soap or a shampoo, it take 20 minutes just to find someone that has keys to open the glass storage so that you can get your simple item at Target. I think there's no recognition that theft even happens. It's almost like they're trying to hide the fact that there's theft in their stores is the vibe I'm getting.
Yeah. Bearish, let's call it blind retail operators, bullish Amazon.
That's where I was getting at, actually.
That's where you.
Yeah, what would I forget? Okay, this. Yeah, like that. So they have aisles of this stuff.
That's my experience.
I've seen some videos. There's whole stores that are basically locked like this. Not even just the high end items.
New York City, Dwayne Reed, all of these stores. I was as a Floridian, I was what the heck are you guys living in?
So you're not recognizing the theft. You're pissing off local law enforcement, and your own employees are disgruntled about this because they're literally like, just let them walk out the door. Don't even call the cops. Don't even record it. We don't even want to talk about it. This is the vibe I'm getting. Target's like, we're just going to ignore this completely, other than putting glass displays up. So I've seen a lot of dividend investors buying Target purely on valuation. Now here's another valuation story. Like, I'd be really concerned about buying Target, honestly.
Yeah.
I think you're discounting the story. Now here's where the story comes into the valuation. This is bad. Like, what's the turnaround? You have to tell me what the turnaround is. Is it a change in mindset or management style from the CEO? Something politically driven, or I don't know. But they're Target's in a bad place. The whole idea that they were a premium brand over Walmart, like, it's not held up. Walmart, I don't know exactly what Walmart's doing with theft, so I don't want to speak about it. But Target, this is really not great what they're doing. So that's my opinion. But I would be very, like, retail is an interesting trade, maybe, but Target in there, I'd be very concerned about what I'm seeing.
Yeah. Are you invested in ASO? Because I heard that they have some interesting practices, anti-theft practices.
I'm not there yet. It's on my watch. That's one of my number one retail targets, honestly. But what do you know? Like, what did they say? When I listened to a call, he said I listened to a call like a year ago. He said that they had some things they were working on for theft, but he wouldn't even say what they were, the technologies or whatnot they were going to use. So he purposely said, I'm not going to tell you what we're doing.
They're using Palantir.
They're using Palantir. Yeah, and C3 AI. Don't forget C3 AI.
Oh, yeah. Yep.
Which rallied today on Amazon News, but yeah.
Yep.
No, I think as far as the whole shrinkage issue, all of the retailers, I mean, obviously they're all getting absolutely smacked right now. It's pretty crazy. And some of them acknowledging it, some of them not acknowledging it. I would say that what you're highlighting here with Target management, just not stepping up to the plate, acknowledging the mistakes, the errors, and it becomes at this point uninvestable for me. There are companies in the retail space, like let me think of one right now. Like I got to check up on them. I haven't checked up on them, so this is not my definitive opinion. But Best Buy, I know that they've been pushing in a direction that seems to be less susceptible to theft. If they implement their new model in every store across the country, I would probably think that that's going to lead to a decrease in theft, or the instances or the occurrence of theft. But we'll have to see. Target, I agree with Garbage Goober's comment on the lack of infrastructure that Walmart and Amazon have. Walmart being a top holding, a little bit biased to favor them and say they have also way more levers to pull than Walmart does. I think that's quite obvious.
Let's just say, like I'm not saying they're uninvestable, right?
Yeah.
Like, valuation might scream it's a buy, but now we're in a turner. Like there needs to be a change of direction, right? I don't know specifically with Target, like, but Fabio Mino with Disney, we understood a turnaround. You have to construct, if you're going to invest in Target, like, what is the turnaround you need to see to buy them? And my turnaround play for Disney didn't match Fabio's. We were probably like 70% same, but we weren't totally on the same page what we wanted to see. So you have to construct what you need to see from Target. So what is your turnaround? And I'd be like specific with it. And if they don't have to hit all your points, maybe most of them, I'm not going to say, I haven't even thought about with Target. My retail plays would be like, I have Tractor Supply. I'm good with that. ASO is a possibility, I guess. Because I think sporting wares are defendable against Amazon, which you don't agree with, but
no. I'll say yes. Yeah.
Okay.
Amazon's really good for consumable products. Right now, they're not threatening in groceries. So Walmart, they'll continue to have their dominance there. Amazon, I'm going to be straight up. They are not making very good inroads yet. They could change. I don't know. But for now, no. And yeah, no. For the time being, I don't really see it as a threat. Bacon, what were you going to say?
I was just going to add in, like, if anyone like wants a turnaround thesis and like speculate or like be responsible with their allocation, like, just only addition I'd add is like be aware of your time frame. Like, it's not, odds are turnarounds aren't going to happen within a month or even a quarter.
So I've been in one of these stores.
Yeah.
Just to
the Best Buy. Yeah, new ones.
So the new remodeled stores. There's one in there's one near me. So it's interesting. I like it. I like what they've done with it. So they've added experiential parts to the store that they didn't have necessarily. More sporting equipment. So they have like treadmills and stuff now. Less CDs and DVDs. So more of the higher end, bigger stuff, which is smart kind of, because you can't steal. You're not going to steal a treadmill, right?
You see,
so I noticed that they
about,
definitely turned to the stores having bigger items, just heavier. I think that was totally intentional. I noticed they moved the cell phones away from the exit more into like more of a center of the store. I wonder if that was intentional, but
yeah, and I think honestly they could probably do away with even having a showcase of actual phones. My opinion. I mean, do you really need to go check out and hold the new iPhone?
Yes.
Yes.
I'm joking.
I don't think so. I mean,
because I'm one of the people with the case.
The other program that they have, again, I'm not saying people should go do this, but it is really compelling. And I think especially if you run a business and you're looking to have, at least updated equipment, they have an upgrade program at Best Buy for various products where you essentially pay over the period of time, over the course of 3 years, less than what it would be to actually buy the product outright. And then you can constantly upgrade. So an example, you can get a $3,700 machine, a MacBook, and you could pay the equivalent of $2,700 for the machine over the course of 3 years. On that period end, you have the option to pay the remaining amount as if you were to buy the whole thing initially, but still time value of money, right? You actually did end up saving. Or you can elect to turn back the machine and then get the new one and continue payments, which I think is actually quite compelling, especially for someone running a business, because now you spread the cost over time. You actually get a more powerful machine for less initial input, because the quantity of payments equate to that of 2,700 for a machine that costs 3,700. It's actually really, really interesting. If they could replicate that across more product lines, I think that they would have a little bit of a niche dug in, because no one else does that. Amazon doesn't do that right now. There's no really need for them to get into that, because Best Buy, this is like do or die for them. Electronics, consumer electronics is do or die. Apple has the iPhone upgrade program, but that's a little bit different. You pay the equivalent of about a 2-year lending or a 2-year loan for it. And so if you're a person that upgrades every 2 years or less, it's actually a recommended thing that you should do. You should consider it, I'm saying. If you're an Apple fanboy, you already know you're an Apple fanboy, and you already upgrade your phone every 2 years or less, you should consider it. If you upgrade your phone every year and you're one of those people, you should definitely do it, because you'll actually save money by doing that. So, yeah.
I've always been interested. I've never gone on Best Buy investment, but I'm aware of. It's interesting. Like,
I just wanted to throw that out there, because it's one company that I've been, I have companies that I keep on my watch list, and then I kind of have okay, this is what they're doing, and I'll check in on them every once in a while. So Best Buy is one of those where it hasn't made the cut to make it in my portfolio. But I'm still kind of coming in there, updating and seeing, okay, what have you done? You said you're going to do this. How have you made progress towards that? And then there is a point right now, the price is actually quite low comparatively to itself. So in historical valuation, it's interesting, but how have they executed on the strategy is the question. I haven't looked into that. So Walmart is a new target from stereotypical Target shoppers. Walmart is the new target. Interesting. I know Walmart has been working towards improving that mentality that everyone thinks of them as the crappy place to shop. The Walmarts in my areas that I visited, at least my experience, they've either already been nice because they were built that way, or they were actually just recently remodeled to be actually quite nice. So, like the layout's different now. They actually even improved small improvements, by the way. I just want to give them credit. Small improvements. So when you remove a merchandise from the shelf, they have something that automatically it's like a small little slider thing that is the other ones, the heavier items, they just slide right down. So it, kind of just makes it a little bit nicer. And then if you're trying to take a heavier item, if you don't have the upper body strength, it helps you out actually take the item off the shelf.
Oh,
so
wait, how would you know?
What do you mean?
How would you know? Because you're a person with actual upper body strength.
Well, no, it's noticeably easier. It's like way less effort.
Yeah, for those that don't know, like Fabio is a big Second Amendment guy, even when he isn't carrying any sort of weapon around, any sort of firearm.
Thank you for the compliment, Bacon.
Yeah.
Thank you for calling me jacked.
Yeah, I thought it was more of a statement of the obvious.
Yeah.
Bacon called Fabio frail.
Yeah. Big Pharma show. I'm dead. BED.
What you're looking at Best Buy right now, right?
Yeah, I was looking at their cash flow.
Yeah. Yeah, I've been on the fence or like glancing here at their Best Buy, but it's been way overdue. So this was perfectly timed.
Something worries me about electronic stores, though.
Yeah. Yeah, I can't put a finger on it either myself, but
I'd probably just buy more Tractor Supply, honestly.
Yeah, honestly, your play in retail right now with Tractor Supply is better.
Yeah, I'm going to quote a certain person named whose name rhymes with Grievous that you may know, and they're just going to tell you, "This is a distraction, Fabio. What are you doing?"
Just buy more.
It is. It is. But all right, I didn't know Caleb,
you know that's not true.
Oh, that's funny.
The degeneracy.
But no, in truth, I think Tractor Supply is probably a way better play. Ulta Beauty, perhaps even a good play as well, potentially. Dollar General has a lot to fix.
Mm-hmm.
But I think they're capable of it. Yeah, Ulta Beauty here, still under $400 a share.
Oh, look at that. That is beautiful. How are they peers?
Don't worry about it. They're both in retail. That's why.
Don't you love?
Oh, they're watching me. I know Seeking Alpha you.
Yeah, if anyone out there is like somehow important, please, if you like make an aggregator, if you're able to improve like competitors, like the market is screaming. Researchers are screaming for a good aggregator on that.
Yeah. Guys, the value traps that Everything Money pick are 8-pillar check marks. Oh, I think this is a commentary of like, what are you guys talking about? They're bad stocks. They're 8 pillars. 8 pillars, bro.
Yeah.
Yeah. Ulta Beauty, Chewy. How is Chewy done? Because Fuhat's actually mentioning Chewy here.
Oh, not on Twitch either. Fuhat went back to.
Fuhat's going back and forth. I can see his like Twitch comments and.
Yeah, Fuhat's just everywhere.
Fuhat teleports.
Well, Chewy's up on the day.
Oh boy, Jesus!
Is that trailing PE correct?
No, that's forward.
Okay, yeah, because I looked at Google.
What's Google say?
Google says PE ratio of 175.33 PE ratio.
My God, does this guy talk about every resale stock?
Yes.
Jesus Christ. I don't know. This was a big winner for COVID. It got up to $100 a share.
Yep,
it was wild.
It was weird because anything pet related for me, like just leaves a bad taste in my mouth. And then behind the scenes, someone like reached out to me,
Wait, why did
collabed
you
on
say
research. Because I was fine. I finally had to eat my own words. I was proven wrong. Like I saw a pet related company that, yeah.
Zoetis?
Was that?
Was it Zoetis?
No, not Zoetis. Or what do you mean? Like, was Zoetis an example of a good or a bad one?
I think that would be a good one. I think they've done well. It's the pharmaceutical, pet pharmaceutical company.
Oh, okay. Yeah. That one I'm not familiar with, but yeah. Yep. At least one proved me wrong for sure.
It's just I looked at this once and I'm like, so they take 50-pound bags of dog food and they ship them to people. Like, I don't see how that's sustainable. That's a lot of shipping weight. Which chat or the pit? Oh dear God. We finally have friends.
Where are all these people coming from?
Yeah, there you go. I'm in here. I'm there also.
Fuhat's recruited people.
Yeah, we're getting the Twitch commenters coming in. Eli Lilly, NVO stalling face. No, that is cool that we are aggregating all the comments here. But yeah, Chewy, not there yet. Oh, one kind of, what's that company? DraftKings. Look at DraftKings' recent performance.
Do you want the screen back or?
No. Keep you can keep it.
Can you do it?
Yeah, DKNG. Look at the performance over the year. Yeah, look at that.
Jesus
year
Christ.
Hey, it finally had its year-to-date bro moment.
Wow. I mean, well, the thing that people have come to realize this year, I only know this for the Disney side because I looked at it for investing. Like the market's been set on sports betting in America, basically.
Mm-hmm.
So you got, I think it's the top three own like 90% of the market. It's DraftKings, FanDuel, and is it MGM or Caesars is 3? But
MGM has the #1 iGaming. I know that.
So I think it's FanDuel's, DraftKings, MGM is like 90% of sports betting in America. So like now that the field's been set, I think that's partially why you're getting valuation spikes. But
yeah, because I think one of the traditional big casinos like withdrew themselves from the online sports betting market.
Because it's expensive and you have to deal with every state.
Mm-hmm.
So like a small player, you could this is almost becoming like the cigarette companies, I think, where it's like the entry cost is so high and prohibitive. You have to deal with every state has its own gaming commission that allows you. It's not 50, but I think they're in most states. So maybe I think it's the recognition of that point to some degree. And yeah, Disney's going to be screwed, but I think it's okay because I don't think their growth story is not the betting app is not so important. But it's a shame they didn't get into it years earlier. They screwed up big time.
Disney?
It was there, yeah.
Yeah.
They'd gotten into this in like 2018. Like it was there for the taking.
They had a lot of misses. Okay.
That they did.
They had a lot of misses, but we'll see. Netflix, I think Netflix is actually approaching not new highs, but new recent highs. I mean, how far away are we from the all-time high? There was an all-time high at almost $700. Wow. Okay, the year is 2025, and my portfolio has $400 in Meta, $600 price in Netflix, and Amazon also recovers. I'm uber retired. I'm gonzo. Yeah, Netflix, just the gift that keeps on giving. I am so happy I was able to pounce on that. Oh, sorry to just like
it's your victory lap.
Yeah, it's a little bit of a victory lap.
I was almost there when they announced the ad tier. I was almost there to buy it.
Yeah.
But there was some other stuff I wanted to. So
I was on the fence, and I ultimately like exited sideways on Warner Brothers Discovery. So go ahead and clown me in the chat.
Yeah,
give it to me. Yeah.
Yeah, Warner Brothers Discovery. the thing is, at the end of the day, it's kind of like the same philosophy of investing in the next blank sometimes is futile or not fruitful. So Warner Bros. Discovery is going to have to overcome a lot of things that Netflix never had to. Not only are they going to have to overcome the things that Netflix had to overcome, they have to overcome additional obstacles. Netflix was not burdened by the debt, which Bacon just coughed.
More debt.
Way more debt. And Netflix only had to overcome one challenge, which is a big challenge, and that's the content wars, making sure that they have enough content to entertain a wide enough range of people. But they've proven, I feel, again in the data, constantly being in the top 10 and dominating the top 10 shows at any given time. Which, by the way, have you guys seen the new movie Killer?
I have not.
Netflix? It's pretty good. It's pretty good. Like another pretty good movie, action movie from Netflix.
Netflix. Oh, I forgot
Amazon.
to start watching.
Yes.
Amazon.
I didn't know it came back already. I can't wait.
Oh yeah.
Yep.
And
dude, I finished it. I read the whole graphic novels. So good.
Mm-hmm.
But
yeah. Amazon has to get their S together and fix Rings of Power.
You're asking for too much.
Oh no, because and then if they execute well on Warhammer, boom, Prime TV is going to elevate to new levels. I'm telling you. I am telling you. It's going to elevate to new levels at that point.
For the Emperor.
Yeah, because they have The Boys, which people liked.
Mm-hmm.
They have Invincible, which people liked.
Yep.
They have a couple IPs that are coming that they currently have. If they fix, will be great, and some IP that's coming out in the future that if they execute well on will be amazing. Because they will be reminded how loyal and fervent that fan base is, and if they bring more people into that fan base, that's also good for that other company that we have been discussing, Games Workshop.
Yep. Yeah. It's
Wheel of Time they butchered.
I think I have like a realistic case for Warhammer with Amazon, and that'd be like it starts and like midway through is like okay enough or like has some great moments, and then towards the end it just like falls off because that's just like the way of so many series, sadly. Like, oh well.
But I'll give you mod on Twitch.
No,
don't do it.
If you promote it on Twitch, you'll get mod.
Do you enjoy my art? Did you see my art today?
That was funny.
Beautiful.
That was funny. Which let's talk about me, Kevin. Let's add that into the conversation.
Yeah, he's joined the Bald Brigade.
Caleb, wait. Before we get into that, Caleb, what? Awesome. No, I'm happy to hear that. I also was using Amazon for groceries, but I thought I wouldn't find another person. I mean, no, there's plenty of people that do it, but it's not as common as people who buy groceries at Walmart, for example. Amazon Prime is actually good amount of quality. It went from last streaming site I look at for something to sometimes being the first. Very interesting. But Grievous, at the same time, you're also like the high priest of Amazon. So kind of biased there. For those of you who aren't in the club, Amazon, I think, has rightfully so elevated itself a little bit, and Grievous is high priest of Amazon. So you have to give him respect.
All else is a distraction.
All else is a distraction from the great Zahn.
All right, so meet Kevin Paffrath.
Oh God, I can do this again. I did a whole video if you want.
Yep. The green-haired Kevin, too pure for this world.
Anyways. This is Dan's. Wait, you already have 2.26K subscribers? You grew fast.
Yeah, I guess.
Yeah.
That's fast, Dan.
Yep. Credit to Dan, and credit to Dan.
Andrew is in my Moat. He doesn't even know. Andrew's in the thumbnail for Moat. Didn't even see it.
Yeah,
So-
your thumbnails have a lot of Easter eggs.
Yep, there's Bobos in most of them.
Yep.
So
So tell us, meet Kevin.
Meet Kevin.
what do I think of him?
Yeah, about what happened.
The whole, oh man, is there people here that really only follow you and not the other two? I wonder. I mean, there must be people that don't follow like Strongman, but
Gotta
Yeah,
be some
like-
overlap, but
I guess he claims that he privated all the videos, so he didn't delete them. Just it kind of set off everyone again because I don't think any of us were following Meet Kevin the last year or so. I mean, honestly, he does like garbage, macro stuff. Who cares? So basically, I covered my video like what Kevin was in 2020 into like 2021, like why people hate him so much. So because people now might last like 6 months or so or a year be like, well, look, he's a smiley, happy guy, good production value. He does useful macro political videos. What's wrong with him? It's like, well, there's a dark side to this dude. Like, and I think he's just trying to hide his past to some degree with these privating his videos. He probably didn't feel like going through them to pick the degenerate ones. So he probably just wholesale privated them all. Maybe he's going to have an underling go through them and pick the good ones. But I mean, a lot. He picked clown stocks. He pumped anything that got views. Everything was just about getting views and made 20 mil. And then he made 40 mil, which some of it was margin, got destroyed. So sold all his real estate, which he sold all his real estate at a weird time after he got his cheeks clapped buying Tesla. So if he tells you he owns Tesla and he's owned it for a long time, that's not true. He bought it, sold it. He sold his whole portfolio in January 2021, which you can go back to Strongman, and I don't know if Echo's covered it.
I have a meme about it.
Yeah, but I mean, it was like crazy because this was like the biggest finance YouTuber at the time, I think, in popularity, maybe not viewers, and for him to just sell, like literally, I showed him a video. Like in November, he bragged about $40 million portfolio, and in January he said he sold it all, and he claims he didn't panic sell, but you could say he panic sold because his garbage share diluting unprofitable stocks went down, or you could say he got margin called, or was afraid of margin call. And then I cover like his whole story of why he sold, which Echoes asked him because I asked the question in a live stream. And it's embarrassing his answer. And the facts show that it's not true. His rationale for selling, because he came back in the market like 2 months later, because he said he was waiting for interest rates to go down or something, which you could argue we still haven't gotten to that point yet. And I don't know. Like, I guess you could say if Kevin was born 100 years ago, like he'd be a carnival barker running a freak show, right? 200 years ago, he would have been standing on a wagon selling you miracle oils and potions. 1,000 years ago, he would have sold you indemnities from the Catholic Church. Like, there's people like Kevin that will sell you whatever they want that they can sell you. And they don't care. Whatever he can extract from you is all that matters. There's nothing else. So. And of course they're like, well, his presentation is great and he speaks well. That's why these people are good at what they do. Like Sam Bankman-Fried was really good at what he did. Like, and people now go like, oh, well, it's obvious he was a fraud. Like, no, it wasn't. The man was calculated. He knew how to move people and get what he wanted. You say Kevin's similar characteristics. So of course he's a nice person. He knows how to smile when he needs to smile, like stuff like that. It's a very polished craft he has.
Yes, he did. Garbage.
Yeah. Yeah. I mean, I guess to try and devil's advocate myself, because I'm in full agreement, is at least he had the courage to show up on some of these live streams to maybe not debate necessarily, but attempt to weasel his way around and be Meet Kevin. But that's like the most I'll try and give.
And people might not, like I'm a mod for Echoes when he used to do live streams, and like no shit, you would mention Meet Kevin's name, he would show up like 30 seconds later.
Yeah.
So like this guy was everywhere. Anybody that like for a channel at the time that was like 3,000 subs, Echo, for somebody as big as me, Kevin, to care.
Yeah.
Like, that's really weird.
What are you doing?
Why does he care? And like the fact that he debated strongman, like just this is all weird. Like, why are you so concerned about these small channels? And like, red flags pop up every time I see him talk.
Lakers in 4. Yeah.
He just wants to extract money from everyone. So that's all it is. I mean, I don't know. Has anyone not seen the video where he admitted he knew nothing about stocks in 2019?
Yep.
To go,
I don't know.
Not even a year and a half later, selling investment courses.
Yeah.
Like, just that's mind blowing. In a year and a half, he went from saying he had no idea about stocks to I'm going to teach you how to invest.
He picked a couple that went bankrupt. Again, that's like a skill, guys. I think everyone, you need to like know that that's a skill.
Oh, do you remember like he called Voyager to invest in the company? So he literally bragged about calling Voyager and saying, I want to get in on this. And he like offered them like 420, 420 or 69. He always used to make those stupid jokes. So he got destroyed just like Jeremy did on that.
Yeah. I mean, that's a whole other can of worms we can get into about another individual, but
I thought Meet Kevin did it for publicity, the whole private all of his videos. That's what I thought. I thought like there was a small percentage chance that maybe it was regulatory related, but I was like, nah, this is Meet Kevin we're talking about. Probably.
People said that like when he started the ETF that he wouldn't be able to talk anymore. I'm like, Kathy Wood's on social media and she goes interviewing all the time. I'm like, that doesn't matter.
Yeah, that's fine. That's not But real quick on you guys, by the way. Do you guys want to talk about which stocks you're buying or what stocks you have been buying?
Oh, before we start, okay, I have a question for you.
Oh, yes, you had a question.
I know that it's related to an ICOM episode. So
yeah, you can. Yeah, fine.
So you heard my pitch about a certain submarine company, but then you bought the other submarine company. So okay, we can parse it so we're not bringing the companies up. But so why did you pick the one that I didn't pitch, but the other one? Because my spoiler alert, mine did better so far. I'm just saying, mine's done better since the pitch. So why didn't you like it?
No, it's not that I didn't like. I actually didn't like either of them for the valuation. And I should probably. So I bought it in the holding co. For context, everyone listening, within the club, there's the holding co, and I update that. I post the brokerage in the club, and I put a small amount into the other company, but as a watcher, and I'm actually out of it.
It was not a real it was a watch position.
Yeah, I'm out of it. No, in reality, I didn't. If you think about it, I technically didn't invest in either yet. But good to know that the other one has actually done better. I didn't like the valuation on either. I thought, I wanted to see if I could get some pullback on at least one of them, but I didn't get it. So to be honest, luck of the draw as to why I threw in the measly amount that I shouldn't say measly, but the amount that I threw in. But I love when Andrew says this. Stop, his faith in me is already dead.
I would counter that, Andrew, with. I was gonna say, and I would counter that with he still has IWG, granted in his own way.
Significant. I would call that now more of a significant amount in IWG.
Yeah, in his own way, mind you.
Wait,
yeah, not
so technically, I've made Fabio's made money on 2 investments with me. So
yeah, because I technically did make money.
Wait, hold on. Are we counting Disney in that?
Northrop and Disney.
No, Northrop is a more significant investment.
No.
Yeah,
No, I agree with you though. I only started a watcher position because the valuation's high, and I'm hoping if there's some budgetary or weird issue with the government, maybe it goes down. So
I'll be waiting. So I have both of those companies on my watch list, and yeah, I'll essentially just be waiting for any pullback that occurs.
The
Because
thesis
right now,
is like 30 years of development, so it's like there's no rush
Yeah.
to get into it.
Yeah.
You could slap a 30p on it if you want.
Probably not that far.
I mean, super easy. If I slap a 30p on Walgreens, I'm probably gonna make a fuck ton of money, right?
Yeah.
How about this? Let's sign a definitive agreement. I'll buy undisclosed amount of Walgreens, and then Bacon. I'll make an agreement with you that in 10 years' time. No, sorry, that's too long because the earnings might decline a lot. In 1 year's time, you'll buy it off me at a 30p.
But why? Why would I agree to this?
Well, because I'm trying to slap a 30p on it, and that's the price I say it's worth.
You're gonna have a hard time even like pushing me towards slapping a 12, 14, 16 on this.
No. I'm gonna slap a 30 PE, and let me tell you what that would be roughly. So that is PE ratio undefined in Google. Okay, so
thanks, Google.
I have nothing to go off of from Google.
Slaps the hood of this stunk. You can trap so much value in this.
But
sold.
I think Walgreens was just at like a single digit PE, like a 6 PE. So that would be 500x, not 500x, a 5x from here.
Did you see it? Did you see the Lockheed Martin Northrop question?
How far away ago was? Oh, in Discord.
It's for the live stream, or actually, it's not for our ICOM. So
wait, sorry. What was that?
What's the QA channel? I forgot its name.
Stream questions and requests, I think.
Yeah, that's the room that I get all my questions when I go in the ICOM streams and the private calls. Yeah.
Oh yeah, I reacted.
Someone asked about why Northrop over Lockheed Martin.
Mm-hmm.
Oh, we can answer that here because that's not really like a super specific question.
Yeah.
Yeah, that's fine to answer here on a public stream. And then I can answer it again in the private stream. But why Northrop?
Now I know they're for okay.
So why would you choose Northrop over Lockheed? I don't know. Wait, Dan might have both. Do you have both?
I have both. So, but
yeah,
I'm interested in buying Northrop, I guess. So I guess that matters. I guess like in his answer, or the guy, whoever asked it, he said like Lockheed had space just like Northrop. Not the same. I would say Lockheed's more of like an aerospace company. Maybe you could say high altitude aerospace, but Northrop's more of more space. I guess you could say that point, because they help develop like telescopes, like in orbit, the rocketry and stuff like that. A lot of these companies have satellite technology, so that's kind of a similar point. But I guess I could say if this one person, so all the budgetary items that are emphases of the Pentagon, Northrop Grumman's in all of them. Lockheed Martin's probably in most of where the spending is going, but not all. The other problem, I don't think and I know he cites like there's similar valuation. Lockheed seems more profitable, I guess. There's a risk you need to value if you buy Lockheed Martin at this point. There's no guarantee they're going to be the 6th generation fighter. There's a lot baked into Lockheed Martin that they are basically, they're like the NATO fighter of the world. Like the F-35 platform is becoming like the world platform for all of these nations. So
I have a question.
No.
No.
No. Go ahead. No.
No, you.
I have a question. No.
No, you.
But if I recall correctly, isn't France in leagues with Germany to develop their own platform away from the F-35?
There is one. Was it the Eurofighter? Yeah, there is one in development.
Yeah, I wouldn't be that surprised, but
would that be a threat for some NATO contracts? Not for the United States. I'm imagining the United States would be like, no, Lockheed. But let's say some of our NATO allies in the West go, oh, No.
Yeah, definitely.
There is possibility, but then again, though, like it would depend on like what the tool would be for. Because like I'm pretty sure Dan, like you recall seeing different headlines, like a certain general will have a B up their bond and be like, yeah, this fighter is really nice, but this would be like taking a sledgehammer when we only have like a regular household hammer will do the job perfectly well. So
yeah,
right tool for right job. Maybe not. Again, I don't know. Too early for me to tell.
And so yeah, that's a risk with Lockheed.
Yeah.
Like there might be priced in there, like all these countries will take on that platform to use. Well, maybe they want to develop their own platform because the F-35 is very expensive.
Oh yeah.
I will tell you guys later about I'm working on researching it still, and I might present it actually soon to the club, but it's a defense contractor I found, and I think Dan's gonna like it a lot.
Oh, okay.
You might have already found it. You might have found
it. What market cap roughly?
I'm gonna give a wider range.
Yeah.
I don't want to give.
Does the name start with a W?
No.
Okay.
No, I remember.
It's between $1 and $1 trillion.
Is it deal with hypersonic missiles?
That's your thing. Dang it.
Does it have to do with that? We don't have to
I believe they might have something like that in their portfolio.
Yeah.
Yes. And another technology that you're like super into right now, and you said I really want to invest in something that delves into that form of warfare.
Okay.
I got it.
They have a pricier multiple, by the way. Like the market has been like, oh wow, you do this is in high demand by everyone. Boom, they slap a
30p,
30-ish, maybe higher, maybe lower PE.
Forward PE, forward adjusted. I'm joking.
So anyways, like
there, but
with Lockheed, like they might not be the 6th gen fighter flat out. It could be another company. So there's that risk.
Yeah.
I think Northrop does things that are, I'm gonna say like moat. There's moat with Northrop Grumman and some of their business lines. I don't know if I would say the same thing about Lockheed.
I have something that I want to like address with that question, but it's more of a conceptual thing on like one subsection of their question.
Which question?
The one that was posed in that Discord related to Lockheed or Northrop, and that would be ROIC. Like, how important is ROIC to everyone? And my bias, or the thing that like made me pause, is and I want to find the study, but I've heard it only referenced in passing, is if you exclude the tails and we got like a rough like normal distribution, exclude the worst ROICs and the absolute best ROICs, and you have in the middle, on average, ROICs that tend to revert to the mean over time. So unless it's like a really super cool and super sexy ROIC, there is a chance that it could revert to the mean in a bad way or in a good way. I don't know if you guys have found this to be true or not, or how much this even matters at all. But
I see what you're saying. That be careful of an anomalous time period on return on invested capital because yes. And let me check real quick, because your suspicion is that Lockheed is.
And I'm not saying it may, it'll play out this way or even is relevant. I'm just saying like just broad strokes, like overall.
Let me actually see. Oh yeah, it is. It is. You are. Bacon's right.
Uh-oh. Whenever anyone says that I'm right, that just means, more work needs to be done. Because I am never right, chat. Never.
Let me actually go into.
The real risk-free rate is inversing my sports picks. That is true, JC. Intel did have a decent ROIC until everything money just plug walked in.
Well, I don't know if they still own Intel.
Yeah, that is true. But yeah. I mean, is ROIC necessarily too trailing? Maybe forward ROIC? Yuck. But
Fabio, where brick wall?
yeah,
You got me.
the lore. Someone mentioned in the lore the PF Chang's that I need to bring it up with you.
What happened?
Someone earlier way earlier in this chat was like, "Hey, you should bring up PF Chang's and Fabio."
Oh yeah, because some rumor came up that I own PF Chang's.
Yes.
I have no idea where it came from.
Fun jokes.
I don't know the origin of the joke.
Yeah. Neither do I. It's if
just,
you know, throw it in the lore, Capital Mindset lore, part of the Discord.
This is hilarious. Wait, actually.
Yeah, if they are who I think they are, and I'm pretty sure I recall who they are, then yes, they have history with it.
Wait, I know the comment people is JC and AP, right? Those are the Everything Money commenter. Are you really? You won't even. That's funny if you are.
I wouldn't be surprised.
Dan probably has. You had a question from them.
Yep.
From who?
You have a question for the mod of r/Everything Money?
How do you sleep at night? I don't know.
Well, I'm assuming they're probably not paid from everything.
Yeah, he probably doesn't make much in Paul.
Yeah.
Oh my god.
How does your outlook on cloud adjacent technologies change given Datadog surprise, Azure? Oh, I don't. Wait, sorry, I have to switch over to this. I don't let people use it.
Yeah, yep. That was my thought. Is that I think that person also got out of Everything Money. Credit to you.
Them use it. Yeah. I mean, there's a lot of refugees from Everything Money.
Yeah.
A lot of them in the club, apparently too. Okay, so has your outlook on the cloud adjacent technologies changed given that Datadog surprise, Azure's beat on growth, and introduction of more value-add products on big cloud players? I don't think. Did I have an opinion that was negative?
I don't necessarily think so. I think that just might be a general question, possibly.
So, okay, well then, if the answer is then therefore no, because it hasn't changed. I mean, my portfolio is probably heavily skewed towards cloud providers, and you could argue or make the argument. We'll talk about Viva Systems. I think it's good to talk about that in a second, but because I do actually want to address something about it. And by the way, B Ross, you have no idea. Look at B Ross's comment. What were we? What was my pitch about Intel?
Oh yeah, is that you like the fab business rather than design?
Yeah. We'll get to that in a second. But nothing really has changed. B Ross's comment. I actually I pitched Intel in the club when I was doing my holding co updates, and one of the I guess biggest or largest points about Intel, and for time being it looks like we've kind of bottomed out temporarily, is I don't really care about the design house. I care more about their capabilities or where their positioning is going to be in fabrication. So that's it. And if you look at it from that perspective, like my thesis might be different from a lot of other people's, and I avoided a lot of that drawdown, in fact. So that's what I'm pitching in a week. In that LOL, complete coincidence. Yeah, no. So I've been bullish on and following Intel for not too long now, but for a bit. Like I've had actually lucky run-ins with Intel kind of coming in and out throughout Capital Mindset YouTube channel, and then we've kind of established a firm positioning in my portfolio now. So. The design team is, for the time being, not a good reason to develop a solid thesis around it. Although if they have improvements over there, good for them. And honestly, from talking with members in our community, Bacon knows, who are far more qualified to talk about this than me, because actual semiconductor engineers, I am not one. The commentary around their capabilities present are not, but at the same time, they gave room for improvement. Now this comment, Viva Systems. I'll actually ask my panelists if they have any thoughts on Viva before I say.
I mean, short-term answer is I have no idea. This is not my skill set. Nor are they cloud computing? Question mark.
No, it's CRM for
okay.
bio life science.
Life science. Yeah, so you combine two things that I'm not good at. This is where Big Pharma Shoal says I'm DED.
Yeah.
So sorry, I have no value add here. I'm sorry, Dan. I should have delayed.
A worse company for me to value.
Yeah.
Buy like, tractors, bro. Like,
yeah, I look at this. I'm like, I am the sucker at the table.
I'll say, short and to the point, I don't like Viva Systems. I'd much rather. Well, there's a question in mind. I'm invested in Salesforce, and Salesforce is a core holding. It's one of the top holdings in my portfolio. And that being said, Salesforce recently had a new hire from Viva. Yep, Bacon.
Did a certain kingdom of finance
bullish Viva? Yes.
Oh, I forgot about that one. And then it just dawned on me.
There's a couple that we forgot.
Go ahead.
So yeah, Salesforce brought on someone back from Viva Systems who used to formerly work at Salesforce in the life science department, or the life science acquisition department. So basically offering CRM solutions for that sector. Now, if you look at what would it be like if Salesforce were to absorb or take share from Viva Systems, it's going to be far less impactful for Salesforce than it will be for Viva Systems. Viva currently runs on the Salesforce platform, which they are ending their agreement here in the coming years. By then, Salesforce will already probably be attacking Viva's customers. So I am not comfortable with investing in Viva Systems because now they are competing against the top dog. And Salesforce has a lot of other offerings that they can tack on and add additional value to customers. And if you write off Salesforce's team to deliver and drive solutions, I would caution you on that. And the original thesis and when I pitched Salesforce was it was a company that at the turn of a dime could turn on the cash flow spigot, and people would forget that they're capable of doing that, and they would regret, not giving them credit for it. They did it. So that's exactly why we saw the valuation run from 100-ish to 200-ish. And I actually, for full disclosure, have had sold contracts on it, and it looks like they're going to expire, and I'm not going to get called on those contracts. Strike of 295. So happy with that. Because we're bashing on selling calls. I like I said, I do dabble, but I don't pretend for a moment that's free money and there's no risk. Al Gordon, that was satire.
Yeah. Yeah.
Yeah.
Oh boy! Oh boy!
I'll say it because Strongman never liked Meet Kevin. Like, come on.
Yeah.
Meet Kevin didn't pay him $2,000 a month, people. Like,
he thought it was hilarious to think that.
Like, you know what? If you said something ridiculous to me, I'd probably just mess with you too. So he has fun with it. Like there's when Meet Kevin pivoted to his political macro crap that he covered. I mean, what's really to bash him about at that point? So he did pivot away from stock picking. So I think that's why. I don't know. Chris would have to say, but I think he left him alone because he wasn't. Lafufu is still there picking stock. So you go after the target in front of you. But
I like Andrew's summary of it though. CRM systems like this are all about setup and integration. I don't know what Viva's implementation execution looks like, but right now I wouldn't bet against CRM. Wouldn't bet on them against CRM. being Salesforce. Yes, I would not. And in fact, I was actually looking to potentially add and destroy my cost base a little bit on Salesforce.
No.
Yeah.
Best of luck. That is not my play. Again, sometimes maybe it's okay enough to know when you are that metaphorical sucker at the poker table.
How much Salesforce does SCHG hold? Because that's my exposure to it.
Yeah. So, to answer your original question, Fabio, what am I buying? I can tell you I am not buying Salesforce, nor am I shorting Salesforce.
I like it. I like it.
That's riveting.
Yeah. Yep. This is
what
I do.
We got to keep the jokes on BurgerFi alive, because people who are OGs.
Yep. They remember.
Stock. Oh, they remember. You remember the stock.
I told people on Discord when McDonald's went under 250, I'm like, it's a buy. You can go look at the chart right now and see what happened after. But who had listened to me actually, and he's done well with it. So,
well,
until he sells it, he's going to sell it.
Well, you're so silly for buying McDonald's, because BurgerFi is going to run it out of business.
Oh, silly.
BurgerFi has network effects. It's a winner take all.
They sell pizza.
Blend and expand. Yeah.
Oh no, not pizza in a burger restaurant. Oh god.
No. They own Anthony's. No, they don't.
Yeah. BurgerFi has a moat, and their adjusted EBITDA is amazing.
If they don't go bankrupt, I will be genuinely surprised.
Fuhat, I am timing you out for a whole week when you sell McDonald's.
Oh no.
Not if, when.
I'm timing you out.
I'm testing your fortitude here, because you bought it and I told you can't sell it when you buy it.
Oh yeah, and BurgerFi is the picks and shovels on the whole world. Therefore, their TAM is the whole world.
I'll give Fuhat credit. I'm glad he didn't buy the Latin America franchise version of McDonald's. I think he made the right move, buying the big boy. So
help me out, chat. What other buzzwords am I missing?
Well, I did actually end up buying a company recently, a new stock that has in the presentation a total addressable market in the 100+ trillion.
Oh, I'm drawing a blank on that company, but I think I remember hearing this.
Yeah, it's really stupid.
Got to be a fiscal one then. Got money.
It's actually an Andrew stock.
It is. Oh yeah.
Yeah, it is an Andrew stock.
Yeah.
So.
Yeah.
Yeah. I've been digging into that company for about 2 or 3 weeks, and no, it's pretty good.
Yeah.
So, but I think I can talk about. I mean, Musa kind of played out. Talking about Amazon. Amazon's left the station almost. Pretty much. I mean, at this point, geez, like, I'm
still digging into the fab idea personally, because I think
I
like it. I like the setup.
I love the setup.
I'm already buying. I have a cybersecurity ETF. I'm in. So now I'm trying to play. I'm not sure how I'm going to play it yet. The chip fab, whatever you want to call it. There's a lot of pieces to think about.
Yeah, I'm done with CrowdStrike. I am not going to be building out CrowdStrike more, but I'm letting it run. I'm not selling CrowdStrike. I'm going to be waiting and seeing if we get any sort of pullback. There are some stocks that I'm looking at trimming out completely from the portfolio, and then taking that capital and let's see how long this rally goes, because I might sell into the rally some of these distractor positions, trim the portfolio further, concentrate a little bit more. We'll see. But CrowdStrike, because you mentioned cybersecurity, that's my cybersecurity play. I probably would have also played some Palo Alto, but I didn't get into Palo Alto, and I think Palo Alto's also recovered nicely. Fortinet, if you liked Fortinet when it was higher,
was that a kingdom? Now. Was that a kingdom?
That was a kingdom, yeah.
That was a kingdom, wasn't it?
Yeah.
Oh, I thought it got crushed today when you brought it up.
Okay. So. All right. So actually, I will honestly answer one of the things that your original question was, what am I buying? Choice Hotels. My limit order around roughly fair-ish value of like 110 got tripped. So I have a little watcher position in it. I'd love to like build into it if it gets lower, but we'll see. We'll see.
Interesting.
Yeah.
What was it? One more time.
Choice hotels.
Choice hotels.
Yeah.
Yeah, Choice Hotels, solid business, strong insider ownership. Hey, Bill Ackman actually increased his Hilton holdings, so he is bullish hotel sector.
The Ack Attack. The Ack Attack is in Hilton. This means either I picked a good one or I am screwed.
Although the death, Fabio will be like your investment, like it. It's fair value. It's okay. That's like him twisting the knife.
Yeah.
Is that what the community has concluded?
That's what I figured. Because you'll be like, I like your. It's not bad. It's not bad. You know, stock's like fair value. It's cool and all. It's like, damn, Fabio's.
I was gonna say that, but that's what I also said was it was fair value, and I got it was just a watcher or so. So yeah.
Hey, I do feel that way, you know. So, yeah.
Yep.
I like a lot of stocks. Sometimes I just don't understand them at that point in time.
I mean, a single watcher on that company for possible fair value ish. Yeah. I'd like to think there are worse
short
choices.
interest on it. How do you feel about that?
Yeah, not great, Bob. just like how there's other things.
Yeah, the short interest on Choice Hotels was probably due to concerns about travel demand. So travel demand crash.
Yeah. The asterisk of any bacon memes pick outside of me being flat out wrong is macro just blasphemy.
Boa noite, Keithan. So yeah, I'd okay. So Dan, what are you buying? He's gonna be like Tractor Supply.
I haven't decided. Like I said, I haven't decided what chip fab play I'm gonna do yet. But I bought some Tractor Supply when it was near 200, and then that's about it. I bought a little CW. Bought some. I'm gonna watch TKO. I'm really. That's so the story around that's intriguing. So, but I don't have any shorts. I sold all my puts like 2 weeks ago, I think. So I'm not murdering any companies right now.
And for myself, I didn't expect, and it wasn't even today. The rally started, and these started a little bit ago, but what Dan already hinted, because they already know what I've added to as far as exposure, fabrication.
Mm-hmm.
Yeah, there was a decent rally, including today. It was even bigger rally, but there's been a decent rally in fab businesses. And I'm looking at some design houses, not the ones that most people invest in. Most people, when they think of a design house, they're like, oh, Nvidia, AMD, maybe even Intel. I'm trying to look at some of the more edge cases. Yes, B-Ross semi-fabrication. So I built out, actually, it's a meaningful investment now.
I love that everybody's avoiding the word chips because everybody's sick and tired of me joking about PepsiCo.
Yeah, they're avoiding.
Shout out Frito-Lay.
I just wish I'd bought more KLA last year. My big regret.
Oh. Yeah. Well, we share the same concerns for the equipment companies. I think they're going to have a tough time, but they're on the watch list. So I feel like we're going to see some opportunities there.
Well, I've been tracking like equipment orders in general. Yeah.
And how are they doing?
They were not great. Not great, Bob. Not great.
Not great, Bob.
I love that.
So, like, we're trying to project like chips look like shit right now. So we're trying to think, okay, what's the as we trajectory into next year? Start buying, not necessarily at the bottom, but it's interesting some of the valuations right now. So, but I think you bought Taiwan, right? So their sales year on year got crushed this year, pretty bad. So I can see that the rebound on that.
High short interest, same reason for what I would say Choice Hotels. Concerns about drawdown in travel. You've caught me. The one you saw in Texas, that was a real one. This is now fake. This is now a fake wall.
It's devotion to
This is false. This is
I fucking bought art. You know, I bought some Walmart furniture.
Look,
Fabio's just
I can become one with the wall. My floating head.
Yeah.
Wait. No, I can change and play around and literally become invisible in just a wall. But anyways, yeah. So, I think design is moving a lot towards. Yes, this has been. I have video on this. But yes, for those, let's talk about this for a second. I guess it's already mentioned. So my concern with a lot of the design houses, and thank you to the person, shout out to our local semiconductor engineer that has been wonderful in dumbing things down, teaching me things about the industry and teaching me some of the vernacular. But that has also shaped a lot my framework in investing in this space, is just understanding, at least from the ground, where the industry seems to be going. So B. Ross actually uses a couple of the terminology that I'll explain. So, for example, ASICs are hyper specialized chips that are not good at doing many things, or good at doing one thing really, 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 really well. Mm-hmm. And the way artificial intelligence is moving is in a direction where a lot of these businesses, these hyperscalers, let's talk Amazon, Microsoft, Alphabet, they're going to be doing a lot of in-house design, building chips that work well with their system. And for now, Nvidia actually has benefited from being a jack of all trades offering or solution. I doubt that's going to continue. I really, really highly doubt that's going to continue. And I am super suspect of Nvidia's management team telling us, hey, the China pre-orders or the China buildup in order flow is already accounted for. Just like when they said, hey, crypto is a meaningless part of our earnings. Remember that? So they already have a little bit of doubt from my end, where I don't really entirely trust Nvidia management team's commentary on this. Going forward, I don't see an environment where they continue to push the same level of growth, especially understanding where, the growth of AI is going to be coming a lot from in-house designs, from the likes of the companies I already just mentioned. So that being said, adding to this comment, traditional fabless design isn't going to benefit from the outside outside of AMD FPGA. There are going to be some of the design houses that can work through this and still come out the other side as winners, but I don't think some of them don't justify the current valuations. So, in summary, buy the picks and shovels.
As a side note, also, I really liked, and I'm thankful that I was able to get a good look into ARM, as far as some of the muscle movements to look at and look into. Because did a collab with Jesse on his YouTube channel, in his live streams, where we talked about the potential and the potential risky sides of ARM, around that IPO date.
Yeah.
Yeah. It's everywhere. It's everywhere.
Greystone. I should start making. I should start really try to make videos again. I gotta find time and make videos, because I like all these topics in the live stream. So many of the people watching right now, you guys get you guys get this commentary, but I don't have it focused, so the information doesn't get out to a lot of people. And if it's public content, it's public content.
Yeah.
So, which means it's out here publicly now. So, the goal is to get it out there. But do you think Nvidia has a moat? I think presently they have a moat, but especially in technology, right? We have to constantly reevaluate moats. Mm-hmm. They might have a moat for just a specific period of time where I can say to you definitively, hey, Greystone, right now, Nvidia has the best jack of all trades product. They have the best graphics cards. Right now, this is great. Let's make some videos, dude. Andrew, let's make some videos. We can find time. I will find time. You let me know. Either during Thanksgiving week or after. Okay, but I don't want to be that guy that makes an excuse, but I am going to Europe after Thanksgiving. So I actually will be gone for about 2 weeks. Little under 2 weeks. I won't be able to record with you because it will be absolutely insane to record with you just because of the time difference. But when I'm back, yes. And maybe right before I go and when I'm back. There's going to be some generic design firms that will be about a 300. Absolutely. Yeah, absolutely.
Mm-hmm.
Yes. No, B Ross. Okay. So B Ross, you have all this information already. We're on the same wavelength here. So that's exactly where I'm at. That's exactly where you're at. And a lot of people here on YouTube, retail investors, don't understand that. And so you're projecting out certain companies having the same level of growth way out into the future. And that might not be a well thought out, not strategy, but, let's say projection. So
I gotta do more Moat videos. I love Moat.
Moat.
So interesting.
Moating.
You like the definition is long-term, right? Long-term ability to fend off competitors and defend your margins and ROIC. It's kind of what Morningstar talks about.
Yeah.
But then what's also true is that they can lose. Moat is ever changing at the same time.
Yep.
So, a company has a moat until they don't have a moat. Like Nvidia, at some point, will not have a moat. I mean, do you know when? I don't know.
If you ask me for most of my companies, I can tell you what is their moat and how much and what's the threat. I can probably answer that question for the vast majority of the companies I invest in. There might be a couple that it takes me a minute. I have to refresh, but off the top of my head, the vast majority I can answer that.
Is brand a moat?
Brand is part of one of the 5.
Yes.
Moat.
Yeah.
Yeah.
And then some people would be like, brand, that's hardly a moat.
I mean, I would argue you could say Nvidia's moat right now is they're like a monopoly almost. What's the name of that moat? They don't really have a true competitor. So yet.
Yeah. Here, I'm actually getting some people with questions, I see. Nvidia was a buy at $14 to $17 and is now very overbought. I mean, wow, that was like a long time ago.
Oh, geez, yeah. You made out like a bandit.
You did make out like a bandit.
Okay, cool. I mean, that's great.
Yeah.
The steel case, I can answer that one. I mean, steel case is I'll tell you guys, I already told
I just got my steel case chair.
Oh yeah, you did? How do you like it?
It's different. It's very firm. I'm getting used to it.
Great lumbar support.
Yeah,
lumbar.
No, it's just it's so different. Like you're like up and like I can lean back, but you're always in that like rigid lumbar support. So so far it's good. I'm getting used to it. But
I like the chair.
Yeah, I got a refurbished one for like half price. Pretty sweet.
Oh yeah. Did you go through
PTOD or something?
PTOD? Okay, they're good too. Yeah, because I went with Crandall Office Furniture.
Yeah, I'm like, say half the price, and they refabric it, do everything new, and it's half price. I'm like, cool.
No one in the consumer side should ever buy a steel case from factory. Don't do it. No reason.
Don't do it.
Steelcase's customer base is primarily from, it's B2B. So the answer to Steelcase, right? So one, they have, I would argue, I'm not going to use branding as a moat, okay? But it's actually it is one of the factors there. They have, I would argue, a very weak moat. because you do have a lot of entrants constantly in the office chair space. They compete mainly in the mid to high end, and in the mid to high end, there really isn't much. But again, you don't really have a real defensible position. Realistically, it's in their ability to meet massive order volume, where some of their competitors can more so they're more competing on that consumer side. Steelcase has a lot more capabilities to compete on the business side. So big orders for large offices. They can fulfill orders not only for for chairs, but for desks, for all this other office furniture. And so that's more so along the lines of the scale that they're able to meet is in effect one of their moats, but that's not really that strong. It's not that deep. Someone, if they invest a decent amount of money, could probably replicate some like counter offer. They have other competitors such as Miller Knoll. Miller Knoll's their probably most direct competitor. I'm trying to think of another one off the top of my head. Some argue, but this is again more consumer. It's Titan. Is it Titan, the gaming chairs?
Possibly.
Yeah, but that's again consumer side, not really B2B. So yeah, they probably have the weakest. Which is a better chair? That really does depend. Herman Miller has really good offerings. I don't like the Herman Miller what is it, the Aeron? I don't like it personally. I am a individual with a bit thicker legs, so it's a small space for me.
Yeah.
I like to have more ability to spread out, if you get my meaning.
You know what we're
probably better.
Some might say we're hack frauds because we should have talked about Corsair when it comes to furniture. Possibly.
Okay. Fucking Tanner bought that at like all-time highs from future investing. Corsair. Among his many degenerate pre-SoFi, which are they're all degenerate, but
wait, sorry, I have to laugh at Kayla's comment. I don't skip leg day.
Hey, when you talk about guys, it's 3 C's. When you talk about women, it's 2 C's. So he got it right.
I didn't know that. I didn't know that rule. Oh no, Fuhat, you broke the rule.
Wrong person. I almost got a Herman or a Hawthorne. Yeah, the Herman Miller Hawthorne. I thought about it. Or no, wait, that's 2 different things. Never mind. Hawthorne Fern Chair was the other one.
That's the other brand. Yeah.
That's a pretty badass chair. I was close. That was my other one I looked at.
That's how they're going. That gives you a lot more support of the upper back.
Yeah.
See, it's very sad that I have this useless information memorized. Like I'm not even looking at the chair, but you tell me the brand, the model, and I'm like, oh, I know what that is. Like I can go into an office building and I can point a chair. Like that's that chair. That's that chair. We're like, what?
So
who brought this creepy guy in that's like looking at our chairs?
No, I legit would do that sometimes. Yeah.
Real status symbols and watches, it's chairs.
Yeah, no.
I remember like during like who was it? LaFufu talking about Corsair, all this crap. And I'm like I build computers. I've built like 10 computers. My friends do too. He's like, gamers love Corsair. Woo, it's awesome. Look at all these parts they sell. I'm like, I built like a $2,500 computer. The only thing is Corsair is the memory. It was $50. Like, there's nothing special about Corsair. They're just a one of many computer parts companies, and they don't even manufacture their own stuff. It's all third party. So, like, whatever.
Where to buy brick wall though? Let's think. Can I buy it at Tractor Supply, Dan?
As I say, this
you can get brick wall wallpaper.
There we go.
Yeah, there you go. Yeah,
you can do it Home Depot, Lowe's. I know they got it. And then
that's just embracing the lore, by the way.
Well, the Tractor Supplies are not all the same. They do vary their displays to some degree at different stores. So
I love chat. Everybody's either like commenting who's in chairs or people are flexing what chairs they got.
I have a Steelcase V2. Dan, I think, has a Steelcase V2.
Yeah. No, I have it's a Lamina. So it's a Leap with an Amina bottom piece.
Yeah.
Because BTOD does hybrid chairs. I was like, all right, give it a shot. But,
yeah, screw watches and cars. Just talk about
chair chat.
We can talk about watches too. If not, I have to invite the watchmaking friend.
Yeah.
Ticking and hacking, and he can come on and he can talk watches if people are actually interested in that stuff.
I would not be surprised.
Yeah, I know that we do have some watch guys in the community. I think one of the natural eventual things that occurs is you start to delve into collectibles, and watches can be viewed as some ways collectibles, but people do it sometimes for the wrong reasons. But anyways,
yeah, also a healthy amount of golf people.
Herman Miller Aeron. Yeah, I like the breathability. It's just mainly it's the plastic. It's mainly like the plastic thing. It's too restricting. But yeah, you say this, and honestly, Fuhat, it's not for you.
Is this spreading? Is quote, is this, it's not for you, just like going to spread?
It's catching on. It's catching on because you keep saying it to me for Crocs, and so it's catching on for others.
Oh no.
I don't like buying commoditized businesses like this. Big red flag for me. Except for oil. But
except for
oil's different.
I bleed black.
Dan he's an oil man.
Oil. Yeah, an oil man.
Dan drinks your milkshake.
Drinks your milkshake. I would say, okay, so I gave an updated, not analysis, but just like an update on Tyson recently, actually. So I'll comment a little bit about that. What were the new stocks? Wouldn't you like to know, Kethan?
He's in a hurry.
Yeah, he's in a hurry. You just want to know the names and then just be gone. Okay, so you have the four main segments of the business. You have branded, which is going to be the highest margin. You have chicken, pork, beef. Chicken, pork, beef are all right now, or were at least all three of them in, let's call it thrown up in the air in terms of supply and demand dynamics. They weren't matched up. Chicken takes about 3 months. And the last time I gave a Tyson update was, I believe, summer of 2023. Summer 2023, everything was out of whack. Chicken was out of whack. Beef was out of whack. Pork was out of whack. And I gave some projections. I'll reiterate the projections to you today. So chicken's already back in the green. Chicken has corrected. And at the time I said 3 months, because that's actually from, if you research the industry, you learn chicken requires about 3 months to fix itself. Because go figure, chickens reproduce and grow quickly. Pork takes about 6 months. So I would expect, this was the projection from before, early 2024. And I'd give myself even a little bit more leeway just to make it easy on myself till summer 2024. Super easy leeway, 6 months additional leeway. But I'd argue early 2024. Beef, late 2024, all the way through 2025. At some point in 2025, that's what I'd lean on as far as that sorting itself out. So Tyson Foods, you want to be a buyer typically with cyclical businesses when they look expensive, not when they look cheap. Right now it looks expensive. So following that rule of thumb but not law, it would be a buy around where it's at now. Now I've still hold my 0.6-ish or lower percent. I think it's actually lower now. Percent holding in Tyson. And yeah. Are you looking at charts or just longly? Tyson Foods, wise 7-foot humans. Oh my God, Caleb.
Oh dear God.
That's totally it. Those are the updates.
It's a
He goes, what is VFX?
What a beat! Look at all those awesome stuff.
Yeah.
Oh God.
Puhat is insistent, not for you. I actually have touched Airbnb and on the New York ban. So recent earnings report from Airbnb indicates that management is actually generally concerned about the proliferation of such regulation. However, I don't think we will see that. And the regulation in and of itself, if you really break it down, what it's attempting to do is bring Airbnb back to what it was originally. So if you guys recall, way back in my day, children, Airbnb was a place where you would rent out a spare room. But it evolved into I rent out my whole house. Right? Remember those days, guys?
Yes,
Yeah,
but at least we can say that the cameras were always there the entire time.
The cameras?
The political wins against Airbnb are like I'm in New York, so it's like they're like there's cities that are openly hostile to this business. I don't know. And then I think there is a trend to some degree of people going back to hotels. Because you can have some nightmare situations with Airbnbs. Like,
yeah, I was half joking about the hotel
I guess
or cameras.
You'd have to believe that AI, because I think that's what the CEO is bragging about, right? Like AI will help them run better, bigger, stronger, faster at this point.
Mm-hmm.
I don't know.
Yeah.
Just a bummer because like they destroy neighborhoods, like and they're taking homes away from people that otherwise would live there, and then housing prices are a mess. And like my town, you can't have an Airbnb, not allowed. So
I see the question, why is my t-shirt blending with the brick wall? Well, depending on the angle, the camera will start to think, it's the same color. You see like that?
Yep.
You see? And then the collar here, here is this actually the color that it's supposed to be reading to attach the background to. So it's just the shirt I'm wearing. And then depending on the angle and the shadows, it will, you see like that?
Yep.
It gets
as Fabio casually flexes.
No, I'm just trying to move it.
Yeah.
Sure.
Fabio showing off, Second Amendment rights even without a gun.
Second Amendment rights. He is actually invisible. Fabio, okay,
Airbnb,
calm down.
Airbnb is buying an AI startup today.
Oh, are they?
Oh,
it's buying a what today?
They're buying an AI company.
Well, hey, they mentioned AI in the earnings call.
Yeah, because I knew that, and that's a selling pitch from the CEO.
That
AI is the future.
The future.
The future, bro.
The future is AI. Airbnb is AI.
Yeah.
See, you're just.
I mean, I use Airbnb, but I would just go to use another platform. I don't think it's anything special.
How dare you? Honestly.
Yeah, we live in a winner-take-all world.
I've heard like there's been problems, like nightmares for homeowners using Airbnb and getting like the insurance if the renters caused damage. There's been some articles about how that went, but
like home insurance, like because they asked you
Airbnb
if you
covers damages of the renters if they do anything. Oh.
I mean, it's tough. Prediction: AI return on investment is going to be low to negative for most companies in the next 5 years. Agreed. I think that the only companies that are going to truly benefit from AI is companies that have access to insane amounts of data, and they can act on that data, a la Google, Meta, Microsoft, Amazon, Walmart,
Are you going to say Netflix?
Netflix,
What about SoFi?
Oracle,
What about Palantir?
banks.
Did you say SoFi?
Yeah.
Banks. No, I said banks.
Yeah, just banks. Yeah, I jokingly added SoFi.
How could you?
Yeah.
Banks, by extension, payment networks like American Express, Visa, MasterCard.
Yeah. Yeah.
Who else? Who else? Who else?
Hershey's. I'm joking.
Cybersecurity. Already there.
Cybersecurity.
If they're big enough.
But now we're starting to lower it. I think we're starting to lower it.
Oh, here's the stab from Fabio.
Yeah.
No, it's not the stab.
He's like the Fabio polite stab.
It's a little lower, but
Fabio, you've mastered it. You are ready for a C-suite. You have learned to smile as you kill.
Well,
it's equivalent when I call people's investments adorable. That's my way. If I call it adorable, I fucking hate it.
No, I'm not trying to be that way.
Thanks, you all.
But like, I'm saying,
hey, who had Andrew liked my idea. That's all that matters.
Yeah, I would just say it's not for me. So it and I actually mean that, in most cases. So
no, but like Fabio's it took a long time for companies to figure out how to monetize the internet.
Oh yeah, for sure.
How long did it take Google to figure out how to monetize clicks and stuff?
Oh yeah, not only that though, but KPIs.
It's going to be a long haul to figure out how they monetize artificial intelligence.
Yeah. I for people who know me, they know that I like to crap on meaningless KPIs, but even the bad or the KPIs I think are bad, way back when it used to just be visitors on a website. That was a bad KPI compared to what we have now.
Now you're going to have to prove to advertisers if you're going to charge them separately for AI from what is now, they benefit more from an AI, I don't know, integration.
Yeah. So it's I respect
Microsoft is the most direct benefit because they can just charge subscriptions and attach, right? Microsoft can just slap an AI subscription onto what they already do. So that's just the easiest thing to bring into it.
All of them. I would say all of them, the three main hyperscalers.
Yeah.
Even Oracle, actually, throwing in Oracle there.
Yeah.
All of them can attach AI subscriptions.
Some sort of subscription basis already, and they can just boom, here's this. It's only a few, $5 more a month or whatever they charge. But
for point of order, would Adobe and PayPal
using it as some sort of better, stronger, faster version of what's already there for other companies?
Yeah. So if we're thinking about when we're saying ROI, if we're keeping it at companies, let's redefine a little bit. Companies that will profit the most from AI. I think we already mentioned it's just the hyperscalers at the top. They're gonna get pretty much all the benefit. You'll see some companies get benefits in let's say some operating efficiencies here and there, but I think maybe not as much as people think. Some people might be expecting too much. Maybe. So when you were saying cybersecurity, were you thinking CrowdStrike, artificial intelligence being used to kind of detect threats?
Well, no, they will benefit from companies defending against artificial intelligence, let's say, I think.
Oh.
So by, new types of spamware, hackers, whatever you want to call it. So the idea, increase spending on the parts of software companies and so forth for the cybersecurity. So
I like that idea. No, I'm kidding. That's a joke. That's a joke.
Come on, bring it. You bought the wrong sub company, so I mean it's
okay.
How much more did the other one go up by?
I mean, yours didn't go up at all, so I mean,
dang.
So your question doesn't make sense.
He has learned. He's saying it to me while he smiles.
under the bus. That's what we need for a Capital Mindset live stream is an under the bus counter.
Keitham, are you trying to make my head explode?
Oh my god.
Oh, under shelf.
Clowns wouldn't get a penny of my money to invest is crazy. Who's crazy? Evolve. Yes.
Yeah.
Tech is expensive. Yeah.
Mm-hmm.
Yeah.
Thoughts on KRC? I want to hear your thoughts on KRC. I want to.
Oh, you're asking Mohammed Arif? Sorry,
No, I'm not asking Mohammed about KRC. I'm asking Boykin and Dan.
Oh,
12%.
Oh yeah.
Damn.
Wait, so you're asking
I'm back to
Dan?
positive, including dividends.
Oh, you're asking Dan and myself? Question mark.
Yes.
Oh,
Give me the sweet criticism.
My criticism is when it comes to REITs, I know that they rhyme with feats, and I am banging rocks when it comes to trying to value, REITs. At best, realistically, I'm probably eating rocks. So
I think KRC's fine. I have Vornado, so I don't want another office REIT, and then I'd rather buy Agree. At this point.
Agree.
Yeah, my guess is
we agree he's not going to twist the knife on this one. So
no, I agree.
He agrees with Agree. Yeah, my guess is KRC. Yeah,
I
probably.
So much I like Agree's approach so much more in Realty Income right now.
Oh yeah, Realty Income is the avoid for me, which is weird though, just because like there's such a well-known name in the space, but yeah, I would just avoid. Me personally, it's not for me.
So I looked at Realty Income's latest acquisition. Was it Spirit or Sprint, whatever?
Oh yeah,
Spirit.
I'm like,
yeah.
I'm like, this is the exact same thing they already do. Like, it just makes them bigger. Like, this acquisition doesn't make them a better company; it just makes them bigger. Like, so is that where they're at this point? Like,
what's your talk on or thoughts on Wirehouse? Assuming I'm butchering the pronunciation. The Timberland company.
The forest one. That's
our
the
German.
one, right?
Our German members can tell you how to pronounce it.
Yeah,
it's like Wirehouse.
Like
that.
I think that is the one.
Yeah, they are the Woodland REIT.
Yeah.
There's only two of them, I think, as far as I know.
And they're going to be connected somewhat a lot to lumber prices.
Mm-hmm.
So whether justified or not, and that's WY is the ticker.
Yep.
Okay, so currently yielding 2.49%, price 31, 5-year performance up 25.9%. Dividend they've been able to grow it. Let me see where it is. It's been really volatile. So they cut it in 2019, 2020. And then they were able to raise it right back up to $2.17. So they went from $1.36 prior to the pandemic to $2.17, including the cut. They went from $1.36 to 51 cents. So I don't personally like this unless you are investing at a time where, let's say, lumber prices are really low, and you have a specific thesis around timberland. Because as a long-term buy and hold forever, I don't know. I can't. Oh, okay. That's good context. I did not know or forgot about if I remember looking at this, but I don't. They have an annual special dividend. So I don't know what that equates to. But I assume it's variable as it is a special dividend, and it depends on the business dynamics at that time. So that's probably what's causing the decline in the dividend. It might not have been a dividend cut. It just might have been they didn't pay the special dividend that year. That could be the answer to that. But yeah, I personally would not be a buyer in this business unless I have a specific idea surrounding timberland REITs, which I currently don't. So that's my answer there. Let me see now. As regards to
Jesse, yes, we are still going.
Jesse's here. Yes, we are.
Yeah.
We're
Yep.
maniacs. Well, these guys are. I'm very surprised with you guys. Because I know I'm absolutely insane. So I will forget how long I'm going, and before I know it, it's like, oh, it's been 4 hours. Oh,
This is my work from home day, and tomorrow.
Hey, very nice.
I was not work from home. I was out there.
Out in the field.
I was out in the field, and then I came.
You know,
home.
I had to redo my resume. I haven't done it in like 2 years, so it took me freaking 2 hours.
We're gonna be hunting soon.
But well, like 6 jobs popped up in the state for promotion.
No.
Only need 1 more promotion and I'm good. But 14 years to go, I'll be on the beach. So.
beach sipping from your McDonald's dividends. Every time I visit and get a chicken nuggets. Oh man, that reminds me, Chick-fil-A. Go public in my lifetime, please.
I go into McDonald's to get a steak bagel, and I go, keep up the good work.
Wait, I've never had the steak bagel. Is it good?
What? Dude, you can't eat it every day, but yeah, the steak, egg, and cheese bagel.
Mm-hmm.
Get it with the extra sauce. Freaking bomb.
Yeah, speaking of McDonald's, guess what? It's McRibwich time, everyone.
I had the McRib one time.
Yeah, I maybe had it once, and I'm like, why do you do this to yourself? What?
I like every now and again, finance internet will be like, yeah, the stock price of this correlated with whenever the McRib came out. And I'm like, yeah, okay. Say something is seasonal without saying something is seasonal.
Good God. You know, when I worked in McDonald's in high school, we would dump the McRibs in at lunch into the pot.
Oh no.
You never took them out. So you could have gotten a rib for dinner that was simmering for 8, 9, 10 hours straight.
To answer this question, well, yes. And if you look at what some of them have reported, the Tyson Foods is break even right now on pork. So again, that's why I said my projection on the sector is and this is actually in line with some of the language Tyson has been using. So 2024, early or first half of 2024.
Yep.
They're hoping that's going to be the case.
Or we did we forget to talk about wartime CEOs with Tyson? Wartime CEOs.
Do they?
Was it Tyson or Dollar General? I forgot.
Dollar General.
Okay, yeah, I'm mixing up the two.
Dollar General. Okay, wow. Big Pharma Show is going to love your question.
Yeah.
Yeah, he's going to be like, wow, finally someone asked this guy.
Big Pharma, I'm dead.
Yeah, this is going to be like, I'm dead.
Indeed.
So, Capital Mind said, what do you think of healthcare sector in general? Usually it's beating the S&P 500, but well, that's a scary second part of your first half of your second sentence.
Yeah,
now our negative 6%. S&P, which is plus 17%. Yeah, Dan.
Yeah, I don't think healthcare beats the S&P, so it's kind of weird.
I would say it depends on the periods, are my guess, but like that's my default. But I have no idea.
No,
good luck. Good luck. Yeah.
I would say healthcare is beaten down. There's definitely probably some gems in there. Let me kind of shout out some very surface level names, okay? But in the club, we were highlighting Abbott Labs. Some members have been. I'm not going to say it because it's not my place. But some members have been looking at some pharmaceutical companies. Big Pharma Show, I think was one. It definitely was one of them. There are some lesser known biotechnology names that look compelling, and they've performed really poorly this year. Yes. Medtronic is a blue chip medical technology, medical device company that has not been doing well. You can look at AbbVie. AbbVie has also not performed really well this year. AbbVie, former holding of mine. Pfizer has been under some pressure. Bristol Myers has been under some pressure. Johnson Johnson, I think, is flat. If you're not Eli Lilly, which is, rallying like a tech star, you also have what's it? Trying to remember the name of the company. Not Novartis. Although shout out to Novartis, shout out to Amgen as well. Other companies you can look at.
Eli Lilly.
No, I already mentioned Eli Lilly.
Okay.
Not AstraZeneca, but gosh darn it. Anyways, you also have some of the other ones like Thermo Fisher. I don't know if I mentioned Biorad Laboratories, Stryker Group. You have some more degenerate leverage plays, Davita. You have really degenerate leverage plays in the generic space that have really come under pressure with Viatris, Teva Pharmaceuticals, Novo Nordisk, thank you, DHR as well. He forgot to mention Walgreens Boots Alliance, please. The sector that's done really well in healthcare is all the medical wholesale and the distribution companies, Cardinal Health, AmerisourceBergen. Oh my gosh, I should have never sold. They hit $100. Guys, I remember, the thing is, I legit remember when you couldn't convince someone to buy these companies. I should have never sold. Oh my gosh. If I had held, oh my gosh. And I thought I was a genius for making money.
What was your exit strategy with that?
I pretty much, well, let me see. I missed out on 30 additional gains, which is good because that's market beating.
Yeah.
So I did miss out on a market beating return in addition to the already return. To be honest, I thought that the multiple had gotten fair, and that was a mistake. I actually even broke my own rules because you remember the rules I kind of went. It's like when it's debatable, I shouldn't sell. It was debatable, and I sold. I played with the soap there. Hindsight's 2020. It was a mistake. Yeah, I'm looking at it now. I broke $100, and then that wasn't even the best performer. I mean, like McKesson, MCK did even better than that. This one's probably shot up like a straight line. It's up 21% year to date. But let me go back further. Oh my god, it's literally like, oh my goodness, 122% from roughly the time period I bought Cardinal. Well, actually, no, wait. Cardinal Health, no excuse though, because I didn't. Oh, if I had held it all the way, it would be roughly 122% right now. So actually, no, they met each other. But when I sold Cardinal Health, McKesson at that time had outperformed it. If in a hypothetical scenario, I held on to Cardinal Health, right now I would be the same. But I did underperform over the time period I held Cardinal Health relative to peers. And AmerisourceBergen, let me see how that one did. I'm going to tell you like kind of relative to, okay, so I can see this.
When you look and see all this stuff in hindsight, what goes through your mind? What do you think and what do you feel? And what do you feel?
Oh, they got acquired?
Maybe.
Pure so. Oh no, they just changed their name.
Oh, okay.
Yeah, they changed their name. The different ticker core. How does it make me feel? Sad.
Oh, okay.
I have less money
because I've had a suspicion
I
that
outperformed ABC.
that it might be envy that drives market participants as far as like if you had to pin one overriding emotion.
Yeah. Okay. So I did it. I did better. I made a good choice, Cardinal Health to AmerisourceBergen, so I'm happy with that. But I did an inferior choice, Cardinal Health to McKesson. By the way, McKesson is the highest quality player in there. So if I had pitched that to someone, they would have.
Oh no!
They would have been like, you like Cardinal Health? Well, I like McKesson.
No, quit. The poor man is dead.
Greystone, I work in a hospital. We mostly use Abbott. Shout out to Abbott.
Yeah,
that was one that was discussed recently on the recent drop.
Yeah, I have Abbott.
You have Abbott?
Cool. I have Abbott and Cigna. Yeah.
Oh, you like Abbott? Well, I like Johnson & Johnson.
No, you like Johnson & Johnson.
I mean, that's like a fair value stock. That's okay. So
I'm joking.
That's like a fair value stock. That's okay.
You're doing good, champ.
All right, let's just all be really passive aggressive with each other and see if people notice. Like,
no, but like, yeah, like everyone's like, oh, look, miracle weight loss drugs are going to stop people from having heart attacks and getting replacement knees and needing diabetic drugs. So there's a lot of uncertainty, I guess. So
how many pillars does it have? I don't know.
Oh man.
So yeah, those are. I mean, the space itself. You have some big winners. You have some major losers. You have some companies that have just done meh. But I think generally, I mean, this is always the case with every sector. There are gems in here that we can kind of pick apart. Looking at it, I didn't buy Abbott, but I thought about it.
Oh, you thought about Abbott? Abbott thought about you.
Abbott did think about me. The GLP-1s are diabetes drugs, Dan. Shake my head. How ignorant.
Big pharma shield. Based in pharma.
Wait, why is this comment towards me?
I
don't know
where it's coming from.
I mentioned diabetes. I didn't your hocus pocus term there.
Your hocus pocus.
Oh no, does this mean that the peace treaty is gone?
Okay, well, the one thing that when Abbott got beat up was funny because everyone's it's because they sell diabetic testing equipment. Yeah. So I bought some recently. But it's like the diabetic testing equipment that Abbott sells is mostly for type 1 diabetics, the one that people are talking about, which is a big cash cow for them. I'm like, okay, weight loss drugs aren't going to help you with type 1 diabetes, people. I don't know if people are aware it's genetic. So you can lose all the weight in the world, you're going to be type 1 diabetic still.
And there he is. There's bruh. Good old bruh.
Username checks out. Yeah. I mean, it's a fitting username for him. But yeah, that's my thoughts on the sector. So I haven't bought. I have a severe lack of exposure to healthcare. No, I need to be correct. Well, no. There's one that's been creeping up in allocation.
I know what it is.
Yeah, that one's been creeping up in allocation. Yeah. But other than that, no. All right, gentlemen. We're at 3 hours. You guys made it. That's like 4.5 hours of streaming.
Yes.
That's wild. That's like half a day's work for some people.
Yep. I don't know. What did everyone think as far as like a pilot episodes of a live stream with this group? Did it go all right? Did it go all right, chat? Did it go all right, panelists?
Yeah, no. This is good. We can do this more often. Now let me see. I didn't even close the poll. Let me just see the poll. So has CPI peaked? I'm ending poll. Most people said yes. So that being the case, CPI has clearly peaked.
Doesn't mean they're dropping rates, people.
You're just going to inverse this.
Not enough cowbell. Aren't we all a little diabetic sometimes? Especially if you visit Olive Garden. All right. I didn't make it. Andrew, it is like 1 a.m. for us. Yeah, so
ringing the cowbell.
All right, with that being said, guys, thank you guys so much for joining in today. And we shall see you guys on the next one.
Okay. We'll do it live. Okay. We'll do it live. It. Do it live. I'll write it and we'll do it live. F***ing thing sucks. Yeah.